report on
Right.
this computer. All right. Thank you so much, guys, for notifying me that you can see the screen. Thank you so much. All right. So, like I said today, the first session, what we're going to be discussing is what I call the first entry. Okay. This is what I call the first entry. All right. Why is this thing not moving? Just hold on, guys. I just need that the Zoom thing to move. Honestly speaking, I just need it to move. All right. So, like I said, today we're gonna be okay. There it is. It's moved. Great. All right. We're gonna be discussing the first entry. Okay. So even when you come here, guys, I want you to come with a clean mind. Let just pretend you just learning something new for the very first time. Okay. And then you wanna focus on this thing, practice what I'm teaching you, and you'll see your trading improve a lot. Okay. So the first entry, okay, it is based on what we call a star. All right. So the first entry it is based on what we call a star. All right. It is based on what we call a star. So someone might ask, King, what do you refer to when you say that the first entry is based upon a star? Okay. So if I had to explain a star, okay, so a star is a candlestick, all right, is a candlestick with a small body and wicks, all right. That's how I get to explain a star. It is a candlestick with a small body and wicks, all right. So obviously, a lot of people, if you've been in the market and if you've learned candlestick patterns, some might say this is a hammer, this is a hanging man, this is this, right? But for me, I just prefer to call it a what? A star, all right? I just prefer to call it a star. A candlestick, right, with a small body and what? And wicks, all right? This is what I call a what? A star, okay? It might come in different variations sometimes. Let me say this is the body, then, the wick is like this. You know what I'm saying? But what you need to know is whenever you see this in the market, then you know that King said that this is a star, right? He didn't say that this is the hanging man. He didn't say that this is a hammer. He didn't say this is a morning star, right? King said it's a what? It's a star. All right. So this is the star, right? So now we come to a very important question. So saying that which time frame do we use, all right, when we trade the what? The star. All right. Which time frame do we use when we trade the what? The star. Right. Very key. Very key in terms of time frames. Okay. And one secret that I'll tell you guys. One secret that I'll tell you guys. The money in the forex market is in the higher time frame. If you want to make money in forex, just know that the higher time frame, that's where the answer is. Okay. So we use the star, right? We use the star on the daily time frame, all right? And we also use the star on the 4 hour time frame, all right? These are the only two time frames that we use when we trade the what? When we trade the star. These are the only two time frames that we use when we trade the star. The daily time frame and the what? The 4 hour time frame. That means your entries are either going to be on the daily time frame or the 4 hour time frame. Not the 1 hour, not the 15 minute, not you get what I'm saying, guys. Okay. When you see me posting on the 15-minute time frame, just know that I'm trying to confuse the enemy. I would have taken my entry either on the daily or on the 4 hour. But you'll see me posting on the 80 minutes, 15 minutes, and you're like, hey, that means this guy trades on the 15 minutes. I'm just trying to confuse the inning. You get it? Just trying to confuse the inning. But those that have the strategy, they know that either King took the first entry or the second entry on this pair. All right. So now let's speak about um, how to enter using the daily time frame. Okay, we're gonna speak about how to enter. All right, how to enter using the daily time frame. Okay, using the daily time frame. All right, that's what we're gonna speak about. And then even this side, we'll speak about how to enter using the 4 hour time frame. Okay, so on the daily time frame, I'll give you an example of a cell. All right, I'll give you an example of a cell in terms of what you should be looking for. What is the criteria of saying that this is a good cell when you see a star? Okay, so what will happen is, or what you want to see is, you want to see the market giving you a bullish engulfing candle, right? You want to see the market giving you a bullish engulfing candle, something like this, right? And then the next thing that you want to see is, you want to see the market forming a star. Remember what I said, a star is a candle with a small body and wicks. That's what you want to see. You want to see the market giving you this. Okay. So, one thing I'll tell you is, never assume that a candle is a star if the daily time frame hasn't closed. Never assume. Never send me a text, because I've seen people sending me a text. King, is this going to be a star? And my question to them is always the same. Has the daily time frame closed? No, then that means it's not a star. It will only become a star when the market has closed, when the daily time frame has closed. Then we can say this is a star. The market has closed as a star, right? So now you are in this, right? You've seen that the market has closed as a star, okay? So your sell limit is going to be at the top of the wick. Your sell limit is going to be at the top of the wick. Your TP1 is going to be right here at the bottom of the wick, right? To get your TP2, what you want to do is, you want to replicate the height of the star. You see what I'm doing? You can even take your trend line if if you're using the MT5 platform, right? And then you take it down like this. You put it at the bottom right here. Then what this will give you, it will give you an indication of where your take profit to is going to be. All right, giving you a really good indication of where your take profit is going to be. So you're gonna put your sell limit at the top of the wick. Then this will be your take profit one, and then this is going to be your take profit two. All right, that's going to be your take profit two. All right, your stop loss, right? Your stop loss will always, your stop loss, guys, will always be set at about 800 pips. So some people say that it's 80 pips, but I'll show you guys how I actually calculate this 800 pips on the charts. Okay, I'll show you guys how I calculate these 800 pips on the charts. Okay, so now this is the basic of how you enter using on the daily time frame. If you see a star like this, a bullish engulfing candle followed by a star, you know that you're going to place your sell limit at the top of the wick. Your TP1 is going to be at the bottom of the wick. Then you want to replicate the height of the star. You want to replicate the height of the star, and then it will give you your take profit too, right? So now, after this candle has closed, right? After this candle is closed, because I've seen people making a mistake, right? Is, guys, you have to wait for the next candle that forms to come and do what? Just hold on for me, guys, a bit. my thing right now. Sorry about that, guys. So what I was saying is, right, after the star has formed and closed, what you're waiting for is you're waiting for the next candle to come and touch your sell limit at the top of the wick, and then you want to see the market going down, hitting your TP1, and then going down, obviously hitting your what? Your TP2, okay? And hitting your TP2, all right? I hope that makes sense, right? So that's what you're waiting for, right? You're just waiting for the market to come, touch your sell limit, that is right over here, and then go down to hit your TP1, and then go down to hit your TP2. Obviously, this is a very clean candle, right? The market won't always move this way. Sometimes it will give us a very beautiful momentum to the downside, hit your TP1 and then hit your TP2, right? Sometimes the market, will do this. Sometimes the market will come after this candle close, come and hit your sell limit, go down, give you a correction, then go down, hit your TP1. After hitting your TP1, give you a nice correction, then go ahead and hit your what? Your TP2, right? But if you know what you're trading and you know what you're looking for, you will always be ready. Okay, you will always be ready. For me, I'm able to see these moves before they even happen. If I see on the daily time frame that, for example, VIX 75 has closed with a star, immediately what I do, I go and set my sell limit. If I'm going to use 0.005 lot size, 5 positions, I'll place my 5 positions here, put in my stop loss, get my parameters to say, okay, my stop loss is at 74508. Put it in, my take profit is going to be at 65482. Put it in there. Take profit two is going to be where, right? So that even if the market comes and hits my sell limit, either I'm busy with something or I'm sleeping or I'm doing anything else, then I know that I'm protected because I have my stop loss. If the market goes according to my direction, I'll hit my TP1 beautifully, and other positions will be able to hit what? Will be able to hit my TP2 beautifully, right? So you need to trade what you know. And this is what I'm teaching you guys, that this is how you need to enter the market on a daily time frame. All right. This is how you enter the market on the daily time frame. Okay. So let's speak about how to enter on the 4 hour time frame. And I'll give you guys an example of a buy setup. Okay. So the market also in this instance, it has to give you a what? A bearish engulfing candle, right? A bearish engulfing candle. Then we want to see the market creating a star, which is a candle with a small body and wicks, right? Market has created a star. It has closed as a star. You're not assuming that this candle is going to, it has closed as a star, right? You're going to put your buy limit right over here. Your TP1 is going to be right over here. Remember where I said your TP1 is going, your TP2 is going to be? What to calculate your TP2 is you want to take the trend line and you want to replicate the height of the star, right? And with a buy situation is you take it to the upside like this, and then it'll give you a good indication of where your TP2 is going to be. Your stop loss will always be at about 800 pips. That's your stop loss at about 800 pips all the time. Okay. So that's your stop loss right there. Will always be at 800 pips. Your buy limit will be at the bottom of the what? Of the wick. All right. And your TP1 is going to be here. Your TP1 is going to be here, and your TP2 is going to be right over there. All right. So same thing with the buying opportunity, right? So what you want to do is You want the market to come, touch your buy limit, then go to the upside, hit your TP1, go to the upside, then go hit your TP2. Okay. So it's not always that the market will hit your TP2, right? Sometimes the market will hit your TP1 and then, go the other way, right? So what you just need to realize is that that if you've hit your TP1 and the market has gone up, you want to move your stop loss to TP1, right? If the market decides to come back and not hit your TP2, you know that you've made maximum profits. You've hit your TP1. Your stop loss has been hit at take profit one. Therefore, you didn't lose anything in the market, right? You didn't lose anything in the market, right? So now the difference between entering, all right, on the daily time frame, on the 4 hour time frame, it's slightly different. Okay, it's slightly different. How to enter on, yeah, how to enter. Okay, it's slightly different, all right, and it's slightly different in a sense that most of the time on this pair specifically, which is volatility 75, right? The market has a tendency, right? It doesn't happen all the time, but the market has a tendency of, instead of coming to hit your buy limit, right? It will turn about 100 to 200 pips before your buy limit, and then the market will continue to go up, hit your TP1, continue to go up and hit your what? Your TP2. Okay. So the market has that tendency, right? It has that tendency to say, you know what? It can reverse, that the market can reverse. Let me just write it down. Reverse at about 100, to 200 pips before your buy limit. Okay, before your buy limit. Before your buy limit. Okay, so you always want to be cognizant of that when you are trading volatility. 75. Okay, let's just remove this by mistake. Okay, so like I said, you always want to see. Sometimes the market will reverse at about 100 to what? To 200 pips before hitting your buy limit. Okay, I hope everyone understands that. Before hitting your buy limit, always keep that in mind. All right, especially when you're on the 4 hour time frame when trading volatility 75. The market has a tendency of reversing at least about 100 to 200 pips before it touches your buy limit. But on the daily, the market always will come and touch your sell limit. The market has to come and touch your what? Your sell limit. Okay. Any questions before we move on, guys? Okay, no problem. Probably you guys will have some questions when we move to this. Okay. So how I've summarized this, right? I've summarized this to say, summarizing what we've discussed. That's right. To say, whenever you see a bullish candlestick, all right. Whenever you see a bullish candlestick, all right, followed by a what? Followed by a star, followed by a star, what are we expecting next? What are we expecting next? We're expecting the market to sell. Okay, we're expecting the market to sell. It doesn't matter. Thank you for raising that question, Bonel. I actually missed touching on it. Okay, we'll go back to it. The color of the star, it doesn't matter. What happened? Okay, we still on. I thought I lost you guys there. The color of the star doesn't matter, and we'll go there. Okay, so always keep this in mind. When you see a bullish candlestick, followed by a star, you know that the market will always sell. Okay. If you see a bearish candlestick, right, followed by a star, we know that the market is going to do what? The market is going to buy. All right. We know that the market is going to buy. All right. So going back to what Sponello asked, right? So what he was asking is, or what he was confirming is this right here. To say, King, what if here, right? What if here the color of this star is red? Will the market still sell, right? If the color of this star is green, will the market still buy, right? And vice versa. You get what I'm saying? Vice versa. At this point, you know what? The color of the star, guys, it doesn't matter. What matters is, did you see a bullish engulfing candle followed by a star, right? And then you know that the market is going to sell. Bearish engulfing candle followed by a star, then you know that the market is going to buy to the upside. Okay, so it really doesn't matter whether the candle is red or it's green on either star. It really doesn't matter. Okay, so now something that you also need to be cognizant of, right, is, King, how do I know if that star is valid or not? Okay, so that's another question that we come into, right? To say, how do I know if that star is what is valid or not? All right, very important question, because not every star that the market creates is what is valid to trade. Not every star that the market makes is valid to trade. Therefore, we do not trade every star that the market makes. Okay. So then how do you know whether this star is good or if the star is not good? Okay. So, like I said, again, we come into an example of a sell. The market will give you a bullish engulfing candle, right? Give you some nice wicks like this, right? Give you some nice wicks, right? And then you seeing a star forming, all right? Then you're seeing a star forming like this. You see a star forming, all right? So what we've seen in the market is that when the wicks of the bullish engulfing candle are higher than the one of the what? Of the star, then this star becomes invalid. Then this star is what? Is invalid. Okay? I want to repeat that, guys. Okay? I want to repeat that if you didn't get it. Okay? So what I'm saying is, if you see the wicks of the what? Of the bullish engulfing candle longer or higher than the wick of the what? Of the star, then you know that the star is what? Is invalid. That means you won't trade. Even if the market comes to the wick of the star, you won't take that trade to the downside because the market can still go to the upside, right? So pay careful attention to the what? To the height of the wicks of the star. Are they higher or lower than the ones of the bullish engulfing candle? And that will give you a good indication whether that market is good, whether that star is good or not. Okay. So if you want to see if a star is really good or not, right? With the example of a buy, remember with a buy, we said we're looking for a bearish engulfing candle followed by a what? Giving us some nice wicks, right? And then what we want to see is a star forming like this, right? And you can see in this example, right? that I've just given you guys right now, that what? That the wick of the star is longer than the wick of the bearish engulfing candle. Therefore, it makes the star a what? A valid star. All right. It makes the star a valid star. That means when price decides to come to your what? To your buy limit, price is going to do what? Price is going to buy to the upside. Okay. So that's what you always be cognizant of, that. The height of the what? Of the wicks of the star versus the what? The height of the bearish or bullish engulfing candles. Okay. I hope that makes sense, guys. I really hope that makes sense. Is it clear?
Yeah, it is very clear.
It's very clear, right? Very simple, guys. Straight to the point. Very simple, straight to the point. And you'll even see this when we go to the chart. Guys, that's why I always say trade what you know. Trade what you know. I've seen this thing happening over and over and over and over again. Over and over again. And it works. Right? So Bonello just asked the question, say, regarding the wicks, do you consider the outer part or both sides? Okay? Regarding the wicks, do you consider the outer part or both sides? Okay? So for me, I would say you consider the outer part, right? Sometimes in some situations you can consider both, okay? But for me, I always gauge it with the wicks. If I see the wicks are just out, then I know that it is a what? It is a good start for me to trade, right? I know that it's a good start for me to trade, right? But if I see that the wicks for the bullish or either the bearish engulfing candle they longer than the wicks of the star, then I know, like, you know what? I won't trade this, right? I won't trade this. All right. So right now, guys, we're gonna go to the chart. We're gonna go to the charts. Okay. Are you guys ready for that? You wanna see if
Yes.
you knew this knowledge as in like yesterday, how many positions you would have ate right now? You'll cry. You'll cry. You'll cry. The example also that I wanna make is this one. Is this one. Okay. All right. Let me get back to my Zoom and share the screen with you guys. Do you ever encounter cases where the wicks are equal? The outer part, yes, 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 yes. It happens sometimes where the wick of the body of the bullish engulfing candle and the star, they are equal, right? And for me, when they're equal, then that means there's a 50-50 chance. That means price can go towards my direction or price can also shoot up, right? So in that instance, I still trade. If I see that it's a sell, then I'll still sell the market. If I see it's a buy, I'll still buy the market, right? So very good question. Thank you for that question, Spano. That's those are great questions. Thank you so much, my good sir. Really appreciate that. Really appreciate that. Okay. All right. Can you guys see my screen?
Yes, you can see.
Yeah.
Let's go to volatility 75. Volatility 75 will be much more clearer. Let's start on the 4 hour. I see a lot of good opportunities on the 4 hour time frame. All right. Okay. So the first star that I'm seeing, it is right over here. All right, right over here. Right? Do you see it? Right over here. Bullish engulfing candle, followed by a star, and then what happens next? Just hold on. Just hold on for me, guys. Just hold on for me. I just wanna make sure that these things don't affect us. All right. Look at this. Bullish engulfing candle, followed by a star. What happens? The market comes and then it drops. Okay. Remember where I said your TP1 is. That means your sell limit would have been here. Your TP1 would have been at the what? At the bottom of the wick, right? So to get your TP2, what were you going to do? You come and take your trend line. See where it says draw trend line? You take it, you come here. You just want to get the height of the star, right? You just want to get the height of the star. You take it like, okay, this is the height of the star. You come and bring it down like this. And then what do you have for yourself? Then you'll be like, okay, at this parameter 935729, that is where my TP2 is going to be. What happened? You can see price went, hit your sell limit, came down, hit your TP1, came down and hit your what? Your TP2, you are out of the market. If you want to hold some more, you can hold, given the fact that, you know what, the market is going. Yes, Tandanani?
Sorry, King. I just want to ask something about the bullish, sorry, the bearish candlestick after the star was not gonna hit the stop loss, or how to calculate the stop loss
Yeah,
on that one.
that's where I was gonna come through. Okay, so thank you so much for that question. You guys are even ahead of me. Hey, that means you guys are ready to learn. Okay, there's two other hands. Let's take two other hands before we go to Tandanani's question. Right? There's another third hand. Go ahead, guys.
Okay, King, thank you there. What I wanted to ask is, does when we're considering the star and stuff, is area of resistance and support key to we have to observe these areas maybe, or it can appear even in areas with no resistance or support.
It can, and we'll discuss that. It can, and we'll really discuss that. Okay. So what you call support and resistance, for me, it's key levels, right? It's what we call key levels in the market, right? So that means if the market, let me say, has turned there previously, that makes it a key level. It makes it an area of interest. Therefore, what you want to look for in those areas of interest, let me say, you can see that the market is selling, right? You know that if the market is at an area, a key level, you know that what you're looking for, you can be looking for a star, or you can be looking for the second entry that we're going to talk about tomorrow. So we'll discuss also what your question that you asked, more in depth when we do our third session, which is market structure, right? Where I get to show you guys how the market really moves and how you can be able to spot out your key levels in the market. All right. So really good question. So whenever you decide to see those key levels in the market, then that's when also you can be able to see these stars forming, and then you'll know, like, okay, if I see a star, then I know I have to put my sell limit here. But also sometimes these stars, they can also appear at levels where there's no key levels, right? Where there's no key level, it's just a normal area, and then it can just appear, and then you just go ahead and either buy or sell the market. Okay, I hope I answered your question.
Yeah, thank you.
All right, another question, guys. Or maybe all questions are answered.
I think. Yeah, can I ask a question, sir?
Sure. Go ahead, my good sir.
Yeah, looking through the candles before the star you explained, there was one bullish star.
Which one? This
move,
one.
move a little bit back. No, to the right, to your left on the screen. To your
This
left.
one.
This one. No,
We
the
can
first one you
annotate.
just pointed to.
This one.
Yeah.
Or this one.
Yeah, the first one, yeah. This one. The one below, the one you first talked. Yes.
Yes.
Why is that one not considered?
You know why it's not considered? Remember what I said. Did the market come and hit your sell limit right over here?
Okay.
All right. So what? Okay. So what you're asking is right. So when you look at this one, what you'll be so guys. Okay, this is gonna even make much more sense when you understand market structure. Okay. Remember what people always say, that the trend is your friend. Okay. You want to look for the stars in line with the trend of the market. Okay. You want to look for the stars in line with the trend of the market. You get what I'm saying? So,
All right.
obviously, with this one, remember also the rules that I said, right? Remember the rules that I said. You can see that this bearish engulfing candle, did it have a wick down here? Do you see a wick here? You see there's no wick, huh? You see there's no wick here. And remember what I said, that, you know, you need to see wicks. In the bearish engulfing candle, you need to see wicks. And remember, the star that follows the wick needs to be longer. And you can see here, there's no what? There's no wicks. That makes the star invalid. It makes it invalid. You get what I'm saying? So someone might say, like you asking right now, this could have been a sell or a buy opportunity because it's a bearish engulfing candle followed by a star. But you look at the bearish engulfing candle, how it closed. It didn't give us any wicks on the bottom, making it what? Invalid. Okay. So also great observation, great question. So that you know that when you see a bearish engulfing candle or a bullish engulfing candle without wicks, you know that the star that will follow after that, it becomes invalid. Okay. Yes, yes, that's also correct. There's one N. Okay. So now coming to Tandanani's question, okay. So how I calculate my stop loss, I use this tool right here called the crosshair. Okay. This tool right here called the crosshair. All right. Can you see it, you guys? You can see it. It's called the crosshair. Okay. So, like I said, let me say we entered at the wick of this star right here, right? So what you want to do is you want to take your crosshair to the upside, okay? So as you take your crosshair to the upside, what you want to see is, right? So you can see on the right, you guys can see on the right, right? Where it says plus 0.51%. Can you see it there? Yeah? And then there's where it says point, and then it has saying 494479 points. Okay, sorry about that, guys. I'm coming down with flu. Where it says 494479 points. Okay, so that's where we calculate our pips. So how I calculate my pips is I take the first three numbers. You see where it says 494. That means where I am now with my crosshair, the market has moved 494 pips, right? And then you want to omit the last three numbers. All the time when you calculate your pips, you want to omit the last three numbers, okay? So that means you want to omit the 479. It doesn't matter. The 479, it doesn't matter. What you're going to focus on is the first three numbers, saying that you've moved 494 pips, okay? And then as we take the crosshair to the upside, I just want to show you guys so that you can see that it didn't hit the stop loss, okay? It didn't hit the stop loss. That means 800 pips would have been somewhere there. Okay, so you see, obviously, I'm not getting it properly, but just to show you guys an example, right? You can see that where we are with the crosshair, the market was at where we at right now. It's at 812 pips, right? 812 pips. That's where we are. All right. So that means you wouldn't have hit your stop loss. Okay. You can see that the market did. This is what we call a drawdown in the market. We call it a drawdown. All right. And then you can see that the market gave you like hit your TP1 and then went ahead and hit your TP2. Okay. So if we would calculate, let me say you were risking 800 pips, right? You're risking 800 pips, right, with this move. But let's see with your TP1 and TP2 how much of profit you would have made. Okay, how much of profit you would have made. Okay, so let me say we did enter there at the wick, right? And then we take this market to the downside. Okay, so with just your TP1, you would have made 1,624 pips. With just TP1, you would have made 1,624 pips. Remember what I always said, guys, when you calculate your pips, just always remove 3 numbers at the last 3 numbers. You see the 717 points. You just want to remove that and focus on the numbers, the first numbers, okay, which is 1624. That means you would have hit 1,624 pips in profit. You know how much that is if you use the correct lot size, especially on volatility 75. Really good money, right? So now that's just TP1. We're just speaking about TP1, right? Let's go to TP2. If we move to TP2, that means you would have hit about what? TP2, you would have hit 3,461 pips. That is insane. That is insane, guys. That is insane. Literally, it is insane. You get what I'm saying? You risking 800 pips to go and make over 3,600 pips in the market. Okay? And that's how you are able to calculate your pips, okay? Using this tool right here called the crosshair, okay? So already when you see the market closing like a star, close as a star, then you know that you put if all your conditions have been met, you're seeing a bullish engulfing candle, then you know you put your sell limit right over here, you put your stop loss already, you calculate your stop loss before, you set it so that you do not panic, right? Because a lot of people panic, guys. Sometimes you need to give the market room to do what it has to do. You see me sometimes, if I've entered these trades using the star, especially on the 4-hour time frame, I leave it, guys. I've set my stop loss. I've set my TP. I just leave the market. I go and do what I want. I run an errand. I go buy bread. Go do whatever, and then I come back after 4 hours. I'm like, oh, the market closed. Boom, take profit. Great. That's it. I don't have to be panicking like, yo, the market seems like it's reversing. Yo, let me close. And then after 5 minutes or 10 minutes, the market goes towards your direction. You're like, yo, why did I close so early? I shouldn't be. Yo, it's because you're trading what you do not know. That's why you're trading what you do not know. For me, I've seen this move happening a lot of times. So I know even if I have a drawdown, if the market hits my stop loss, it's fine. It happens. That's the market. It hits sometimes the market will hit your stop loss. You will not always win in the market. You will always not win in the market. But I know that the next opportunity that I get, what am I gonna do? I'm gonna profit. I'm gonna profit the next opportunity. Okay. So that was just one example on volatility 75, right? You can see here, Who can spot a good star here? The next star that you see, like, oh, okay, this is a good one.
I think another one at 102897.
1090.
2897. 2897.
9
1028 10
90.
1 1 10 1.
Oh, 10.
Yeah,
1028.
2897. Yes, around that.
28.
The sell, yeah, the
Which
sell
one?
opportunity. The sell opportunity. The bullish candlestick. After that, it was a red star. On your left,
Yeah.
that one.
Oh, this one right here. Well, you see, this one didn't materialize.
Yes.
It was a very good sell. Okay, so thank you for actually raising this. Okay, I hope you guys see where we at right here. This is what we're focusing on right now. Okay, you see it. Thank you so much for raising that. I actually like asking this because then I'm able to clarify certain things that you guys are seeing that are not stars. Okay, so guys, all right. That's true. That's very true. And that's what I want to explain, Sponen, right? So you write that this was a very nice bullish engulfing candle followed by a star, right? But remember what we're looking for, right? Immediately this candle right here, this red candle, what we wanted is we wanted it to come and hit this sell limit right over here. Our sell limit would have been right over here. We wanted this candle to come and hit the sell limit. Okay, you see where I'm pointing? That's where the market needed to come and hit, but you see it didn't hit. Instead, it just went down. Therefore, this star becomes what? It becomes invalid. All right, I hope everyone understands that, guys. I hope everyone really understands this. Okay, is that if the next candle that opens after a candle, after a star, doesn't come immediately to come and hit your sell limit, then that star becomes invalid. This whole move just becomes invalid. Okay, and I hope everybody understands that it literally becomes invalid. Okay, what we want to see immediately is after the star. Then you can see, and this was a really good start. It would have been nice if this candle right here came up, touched your sell limit at the wick of the star, and then started selling. Okay, and then started selling. Therefore, it makes the star invalid. This star then becomes what? It becomes invalid, right? This star becomes invalid. That means you don't want to trade the star. It's already invalid. Okay. I hope you guys understand that. I hope you guys get to understand that. How about the right bottom corner? Which one at the right bottom corner? Here. Talking about this one here. You know you guys can annotate. Eh? There was a nice bearish engulfing candle right over there. Okay, I'm gonna go to it. Which one, Mike would say? Which one?
Okay. Okay, you see those 3 candles you just pointed out. There's 3 candles in line there which have 3 wicks at the bottom. No, go to your left. Yeah, more. Yeah, those ones. No, go to your right now. No, just go at the bottom. Yeah. The next one. Next one again. Yeah, that one. Yeah.
This one. This one right here.
Yeah, you see the first big, no. The first big red candle.
This one.
Yeah, that one. Yes. Yeah.
Mhm. This is not a star.
Okay.
Not a star. This is not a star. Right?
I,
Remember
I
what I
think I
said?
saw one.
I think I see one.
Annotate, guys. You know you guys can annotate. I want you guys to annotate. If you guys can annotate for me, you can, man. Go to, you see on the Zoom option where it says more. I think it says where it says more. I think that's where you can, or where it says, because for me it says new share, course share, then it says annotate before remote control. Then you can be able to annotate. If you guys can annotate, yes, yes. Who did that one? I didn't see. Who did
Exactly
that
that one.
Who did this one? You did this one, Agnes.
No, that's what I wanted to point out.
Yes.
Oh, that's
This is a
me.
good
I did
start.
it, Carl.
Yes, Carl. This is a good one. This is a good
Yeah.
start. This is a good start. You can see it. Very good start. You see what I'm saying? If you guys knew how to trade a star, you guys would have made millions or thousands by now. You see it? Very clear. Very clear. Thank you so much, Carl. Very clear, guys. Very
Thanks.
clear. That's another one right over here. This is another one right over here. Where's another one? Where's another one? This also here is another one, but it's not as clear. You can see the market didn't come to the wick and touch it. This one right here also was a good one. You see this bearish engulfing candle star, and we're taking this one in light that the market is trending bearish, right? The market is trending bearish. Okay, this is a very good one also. Very nice star. You see, came up. Very good star also. Very good star. Okay, guys, I think the trick here, or what you guys need to recognize here, is that it's what I said when someone was asking about the after a star has formed. After a star has formed, guys, the next candle that opens, you want to see it coming to test immediately your sell limit. You want it to come and hit your sell limit immediately. And if you can see all these stars that we've pointed out, what is the common denominator with them? You can see that the next candle that opened, it came to touch the what? The buy limit in this instance, then the market went up. In this instance, the market came to what? To touch your sell limit, then the market fell down. In this instance, what happened? You can see that the market came to touch the what? Your buy limit, and then it went down. You can see hit your TP1, TP2. Even here, it hit your TP1, TP2 if you're going to replicate the height of the star. Even this side, TP1 was hit, TP2 was hit if you're going to replicate the height of the star. Okay. I saw Tandanani raising his hand.
Oh, I just want to know something, King, about the bullish engulfing and also the bearish engulfing. It doesn't matter if it is close about 50% or above that. It doesn't matter.
So sometimes what I understand in this instance, right? If we can look at this instance, right? If we look at this one right here, okay, that's the one you're asking about, right? So obviously this one, according to our rules, it is what? It is more, it's risky. For me, it's risky. You get what I'm saying? Not saying that the market, after creating this star, the market won't buy. You can see the market still bought, but you will know that when you enter this trade, when you put your buy limit right here, you don't need to put your stop loss at about 800 pips. You can put maybe your stop loss at about 200 pips. Why? Because it's a 50-50% thing, meaning that price can continue go to the downside, or it can still reverse, give you a nice buy like it did in this instance. You get what I'm saying? So you need to use your discretion when it comes to this sense, right? To say, okay, do I want to risk my capital, right? Do I want to risk my capital and take this risk? Or I'm just gonna leave this one here, and you're seeing it playing out the way that it played out. You get what I'm saying? So some entries will be risky, like this one right here that we just pointed out, but some of them will be very clear. Like this one, you can see very clear. This one, super clear. You get what I'm saying? Very, 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 very clear. So some of them, for me, how I utilize them, I know market structure. I know how the market, like this one right here, this sell that we took. Remember that sell that I took? That you guys can see the recent sell that I took on my Instagram. It was because of this star right here. It was because of this star right here. This one right here. When I saw this bullish engulfing candle, the market closes a star, and I literally saw this when the market was running up here. It already even touched this. If you can see it, it's not even a sniper. The market had already touched here, but I was like, fuck it, I'm going in. I went in, I held that trade. It went into profits, hit my TP1, and I don't think this one hit TP2. Let me just try and replicate the height of the star. I don't think this one hit TP2. Yeah, it didn't hit TP2, but it hit TP1, and then I was out of the market. I was really out of the market because you can see where this candle closed and then another one opened bullish, you know. Took my TP1 and ran away. Ran away. That's it. Okay. The more you back test, guys, it's the more you're gonna see these things. The more you back test is the more you're gonna see these things. Ones that are not good, ones that are good, right? You'll be able to see them properly, right? So that's why I'm like, you always need to be cognizant of how the market is moving, okay? Like in this instance, let me show you guys in this instance, okay? You see in this instance, we would have had a lot of entries, even though the market, you can see obvious, okay, we can clearly see that the market is trending to the what? To the downside, right? So that means we're looking, entries that are gonna hold are sell entries, right? Those are entries that are gonna hold. Therefore, we need to be looking at what? At sell entries, okay? So you can see that, yes, the market gave us a star. You can see this was not even a what? This was not even according to our, obviously this is advanced, guys, right? Whenever you start getting used to trading the star, right? Whenever you start getting used to trading a star, then you'll be able to capitalize also on these small moves that the market made, right? Because for me, I saw, okay, this is a star. The market came here. Obviously, some of these things are risky because they're not part of our core rules to say, we saw a very nice bullish engulfing candle followed by a star. Then, you can see that this was a bullish candlestick, even though it's not really huge in size, right? And then if we get to look at the wick that is going to the upside, we can see that the star that opened the wick is higher, right? You look for that, okay, the wick is higher. That means when the market comes to the what? When the market comes to when the market comes to your sell limit that you would have placed right over there, you would have been in what? You would have been in deep profits, hitting your what? Your TP1, right? At the bottom. And with these ones, what I always focus on is just TP1. Take profit one, I'm out. That's it. Take profit one, I'm out. Take profit, the risky ones, take profit one, I'm out, because I know that the market won't be able to hold until TP2. And just from this move, if you would have entered here, you would have made how many pips in profit? You would have made about 1,755 pips in profit just from this one move. Then you are out. 1,700 pips in profit, guys. That's a lot. That's a lot. If you use the really good lot size, let me say, for example, 0.005 lot size. You open probably 10 positions. That's just example sake. According to your account size, you would have literally made about what? Quite a lot, right? Quite a lot. Okay. And you can see also that after this move right here, this right here, we can consider it as a what? As a star, because you can see that the body is small and then the wicks are what? Are long. And you can see that the market came to also test that star, and then what happened? Then that's when then the market went. That's when the market then fell down, TP1, and then hitting your TP2, and then you are out of the market. Okay. I hope you guys can see this. I hope you guys can see this. Okay. So obviously, I want to show you stars on more pairs, on other pairs. All right. And let's look at volatility 100 to see if we can see probable stars here. Let's see if we can see probable stars right over here. This right here was a good star. You guys can see it, huh? For a selling opportunity. That was a very good start, but then the drawdown, I think it's quite higher. The drawdown is really quite higher, but you can see that, you know, it is a very good start, but the drawdown was higher, right? So that's why I'm saying that some, especially, you know, the more you backtest, you'll get to learn the behavior of a certain pair. Like for me, I know when I see a star on volatility 100, I just don't enter at the wick because I know that volatility 100 likes giving, what you call this? It likes giving out drawdowns. You know what I'm saying? When I see that, oh, maybe the drawdown is done, and then I see the market coming back, then that's when I can be able to enter right over here and then hold it, hit my TP1 and my TP2. Okay. Not quite a lot of them actually on the daily time frame. Let's see the 4-hour time frame on volatility 100 if we'll be able to get good stars. Yeah, then that was a nice one, but it didn't literally come and hit your sell limit right over there. So sometimes you see a star and then the next candle that obviously you wouldn't know that this candle is going to close as a star. You get what I'm saying? You wouldn't know that this next candle is going to close as a star, but you know that it would have hit your what? Your sell limit. And then you can see that price did go down. This closes as a star and then went, hit your TP1 eventually on the second candle, and then went ahead and hit your what? Your TP2. Okay. This also was a nice star right over here, even though it didn't come and hit your what? Your initial, you can see it didn't come and really hit your initial buy limit that you would have put, but the market turned at least about a couple of pips before, right? Before the what? Before your buy limit. But I can see that, okay, when I saw this, because this is price action, guys. When you see this, these stars that we talk about, this is the depletion of price. Price is saying that I can no longer sell. Therefore, I need to go up. Okay. So that's what that's what price action means, right? When you see candles losing momentum, this is a loss of momentum in the market, right? So you would already know that, okay, that means the market wants to do what? The market wants to go up, right? You can see right here, the market created a star. For me, I would obviously this is advanced. What I'm showing you right now is advanced. You can see right here, this is a star. Then the market came, and then we would have taken this to the upside. Obviously, this is advanced, right? And you learn it as you go. You learn it as you go. Okay. This market doesn't really create a lot of good stars, really, but they do present themselves. They do present themselves. Okay. They do present themselves. All right. So in this, let me just show you an example of when we're talking about market structure, what are we going to be talking, what are we going to be doing, okay? So in the market structure, what we're going to talk about is that the market always moves in an impulsive move, right? And then the market will give us what we call a correction. So a correction will be something like this, right? The correction will be something like this, all right? Something like this. Price correcting like this, all right? And then from this correction, what we know is we're looking for price to do what? To go down again, to do what? to give us another impulsive move to the downside, right? So therefore, this gives us what we call a pattern that the market creates, a certain pattern that the market creates. The very common ones, we call them a bear flag and a bull flag. This is a bear flag because the market is moving what? In a bearish momentum, okay? So I want you guys to look at something at this. We'll discuss, don't worry, don't even stress yourself about this now, okay? I'm just showing you in light of that, okay? So what we can see with volatility 100 on the H4 time frame, we can see that the market gave us a what? A quite impulsive move to the downside. And then this was just the market doing what? Correcting, okay? This was just the market correcting right here. This was the market correcting, giving us a what? A bear flag, okay? So how do we know that the bear flag or the market is going to turn and break out of this bear flag? It is through this price action right here, the first entry that we call a what? A star. And you can see the market gave us a star. Then I would have known that, okay, the market then is ready to do what? The market is ready to go down again. And you can see the market went down again. What I'm going to teach you also, guys, is the 90% rule, to say that where the market started correcting, that is where the market, that is where your take profit also can be. Where the market started correcting, that is where your take profit is going to be. So you can imagine if you would have entered here, your take profit would have been here at the 4-hour time frame. You can imagine the amount of pips and money that you would have made, especially trading volatility 100, 0.2 lot size. You would have made really massive profits. Okay. Let's look at other pairs. Let's see volatility 100, guys. Because I'm just trying to show you guys that, you know, these things, they okay. They really okay at every pair. You just need to know what you're looking for. You just need to know what you're actually looking for. Let me just zoom in. I haven't looked at this one for quite a while. Let me see recently if we would find the really good star. Well, volatility 100 isn't really giving us a good star lately, really. So it isn't really giving us a really good star lately. Yeah. The one that I took advantage of today, it is this one, guys, right? Obviously, this is advanced, but I hope you guys, you know, there's some guys that are still in this trade. You know, there's a risky lifetime, one of the risky VIPs. My lifetime VIP, some of them are risky traders. They're like, no, King, we holding this. It hasn't hit TP2. We holding. I'm like, hey, guys, okay, go ahead, hold. You know, tell them, go ahead, guys, hold. Okay, but this is the one that we capitalized on today, guys. This is the one that we capitalized on today. This star right here. Okay. Obviously, this is advanced, guys. This is advanced. Okay. This is advanced, but it's what I was telling you guys. I knew that Boom 1000 has been trending to the upside, right? Why has it been trending to the upside? I can tell that the market gave us a impulsive phase correction impulse, and this was just a correction. Okay. This, what the market gave us, this was just a what? A correction that the market gave us right here. Okay. This is just a correction that the market gave us. So I knew that the market has more potential to what? To shoot to the upside. When I saw the market closing above here, when I saw the market closing above this high right over here, then I knew that there's a potential for the market to still go higher, right? So when I saw this trade right here, I immediately opened the 4-hour, right? I immediately opened the 4-hour, and I was like, okay, this is a very beautiful star. We also capitalized on this one also. This star right here, we capitalized on it. And luckily, what I saw is, I saw it at a little bit of a drawdown, right? When we discussed the boom and crash strategy, which is also something that we're going to discuss, then I'll show you when we use the RSI, I could tell where the market was, that this market needs to buy no matter what. And it did buy, and it hit our what? Our TP1. Then I told the guys, let us be out of the market, like get out of the market take your profits, right? And then that's what we did. And then when we came back after another 4 hour, we saw that, okay, the market created the star. And then what happened? The market came, we put our buys here, buy. What did the market do? The market went up, gave us our TP1. And then what happened? We're running towards to our TP2. That's what I'm saying. Other guys are saying we are holding because they wanna go and hit TP2. They wanna go and hit TP2. Okay. So you can see right here, TP2 hasn't really been hit. You can see it hasn't really been hit. It will be hit when the market comes to that point. It will be hit when the market comes to that point. So some of my lifetime VIP guys, they still holding this trade, saying, King, no, we believe that this thing is gonna go up, therefore we're gonna hold it. I'm like, okay, you guys are gonna hold it. That's great. Lock in your profits. So that if the market comes towards your TP1, you know that your profits are protected. You made a lot. So great. Okay. So guys, that's what I was saying. This is just what we discussed tonight. This is just the first entry. What we discussed tonight is just the first entry on how to utilize the star. You can see that the star occurs on every pair. You just need to know what you're looking for. It occurs on every pair. You just need to know what you're looking for. Okay. The more you practice it, the more you back test, that's when you'll see that, oh, okay, when the market is trending and I see a star like this, let me look for more buys to the upside. And you can see here's a bullish engulfing candle, here's a star. What happened? The market continued to shoot to the upside, right? You're taking advantage of the trend of the market, and then you're sorted. All right. So, guys, that was the lesson for tonight. I think we went above and beyond really with tonight's lesson, because I've upgraded my Zoom so that it doesn't give us the 40 limit time frame. So what I would ask you guys is go back, watch this session. I'm gonna add you guys to the lifetime VIP. All of you guys, I'm gonna send you a link to enter the lifetime VIP for 2022. And then when you guys are all in, then I'm gonna send the video there so that you guys can be able to review the video, back test what you learned today on each and every pair. You can even go on currencies, indices, but for now, I would say focus on synthetic indices. Look at the stars on synthetic indices, and then once you're comfortable, what I would say is, for now, guys, I would say use a demo. But if you want to lose money because you still not really have grasped it that much, meaning that you haven't taken a really proper trade to say, oh, the market has closed as a star, let me put my sell limit, let me put my stop loss. If you get to lose money, then you know that that's on you. But for now, you can use your demo and then practice, right? And also, one thing I will end with, right, is that when you guys are using a demo, be practical. Okay, be practical. And what I mean be practical is, if you know that you will be able to afford to deposit $100 account, use a proper lot size, especially on volatility 75. Let me say back test on volatility 75. Put to say, okay, if I use 0.005 lot size and I open 5 positions, if I receive a drawdown of, let me say, 500 pips, how much of a negative will I be in? You get what I'm saying? So you want to gauge those things so that say, oh, okay, that means then if I use 5 positions, 0.005 lot size, that means it's not feasible for it on $100 account. Let me use 0.002 lot size, right? 5 positions, and if I go on a drawdown, then that means my account will still be good. If I make profit, that means I'm gonna make this much of a profit. Okay, so that's back testing, right? That's back testing. You want to see, okay, if I do this, replicate this on a real account, these are the same results that it's going to give me. Okay, so thank you so much, guys, for tonight. We're gonna meet tomorrow night, same time. Okay, and we're gonna be discussing the second entry tomorrow night. Okay. Thank you so much, guys. I
Thank you too
really
much.
hope everyone learned something really valuable today. This is how I always see the market. This is how I always kill the market. If you've always wondered how does this guy do it, this is how I do it. All right. So what I would really ask from you guys after tonight is just to go and back test. If you need to go watch this video again, I've recorded it for you guys. Go and watch it again. If you didn't understand something, really go and look back like, oh, what did King say? Take notes even when you're watching the video again. Those notes that will help you a lot. It's part of journaling, right? That will help you a lot. We'll talk even about that as time goes by. It's part of journaling. That will really help you a lot because you're like, oh, okay, that means here I made this mistake. You will know that not to repeat this mistake. What mistake did I do? I thought this bullish and or I thought this candle was, I thought this, then you know that you are improving. You are becoming a really professional and better trader in the market, right? So thank you guys so much. You guys have been great. I'm gonna let this video convert and I'm gonna send it to you right away when it's done. Okay. For now, I'm gonna send you the link, all of you, the link to the 2022 lifetime VIP session, and then we're gonna take it from there. Right. So thank you. Can you guys see my screen?
Yes.
Yeah, I'm seeing the screen.
Okay, that's perfect. All right. So I think what I want us to focus on tonight is key levels, right? Remember last time we spoke about the nature of the market and how the market either moves in an impulsive phase or a correctional phase, right? So I think once you know in the market from a higher time frame perspective, especially if we've had an impulsive move or whether the market is in a correctional move, then it becomes easier for you to plot out your key levels in the market, right? And then if let me say the market is okay, let me do this, right? Let me firstly do this. All right. I remember we had spoken because I think what I was going to explain, it will be better if I explain it on the charts. Okay. It will be better if I explain it on charts. Remember the first thing that I said that needs to happen is you need to identify your key level, right? That's the first thing that you want to identify, right? Besides market structure and identifying whether the market is in an impulsive move or it's in an impulsive phase or it's in a correctional phase, right? But what I would like to say is before you even identify your key levels, right? I think, Bella, it's key to also identify, right? To identify what is this thing doing? Identify, okay, whether the market is in an impulse phase or correctional phase. All right. Very key, guys. Very key that when you know whether the market is in an impulsive phase or correctional phase, then it becomes easier for you to actually draw out your key levels in the market, right? Makes it quite easier. And when we go to the charts, you'll see what I mean, right? So once you identify that either the market is in an impulsive phase or correctional phase, then you go out and plot out your key levels. And I'll show you how to plot out your key levels when we go to the charts. Okay. And then what happens is when you plot out your key levels, waiting for price to come at your key level, you want to look for price action at that key level, right? Price action at that key level, right? Remember what I said, right? Is that at that key level, either two things can happen, right? You can either get the first entry, which is the star, or the second entry, which is the previous day's highs and lows. But sometimes the market won't give us those two entries, right? Sometimes the market won't give us those two entries, but the way the market reacts at a key level should tell us that the market is ready to reverse, right? And always remember what I said. The way the market approaches a key level, it's very key. Very important, the way the market approaches a key level. Is the market approaching a key level with a bullish or bearish engulfing candle? Are we seeing a depletion of candles, right? Meaning that the candles are getting smaller and smaller as price approaches a key level. Then that should tell us that the market is ready or has a very good potential that it can what? it can go to the upside, right? But it should always be, okay, the market just gave us an impulsive move, bullish impulsive move to the upside. This is just a correction that the market is giving us. Then you should know that, okay, from this correction that the market is giving us, the market wants to give us another bullish momentum to the upside. You get what I'm saying? So the way price approaches a key level, it's of the utmost importance, guys. Always look for that. Don't just enter a trade just because price is approaching a key level, right? Don't just approach. That's why I'm always sometimes like, let's wait for the 1 hour candle to close because I want to see how the 1 hour candle is going to close, right? And you need to develop that thing that you don't have FOMO. Sometimes you'll see that price will be at a key level, right? You'll see price will be at a key level. For example, right? Let me just even illustrate. You'll see price will be at a key level. Let me say this is a key level right over here that we have, right? And then you'll see, maybe let me say price gave us an impulsive phase to the downside. Then we know that this is a correction. Why this is a correction? Because we know that the market needs to shoot up, right? Then you'll see price playing right over here, right? And maybe we're on a 1 hour candle. That candle has 30 minutes to close. Then you see probably price going up. Then you're like, fuck, this thing is gonna leave me. Let me enter my buys. You enter your buys, and what happens? The market comes back again to the key level, right? Why? Because the 1 hour candle is not done yet. The 1 hour candle is not done yet. For me, I wait for the one. If I'm looking at it now on the 1 hour candle, I let the 1 hour candle to play because I want to see how the 1 hour candle is going to close. I'm not going to have FOMO just because prices wants to go towards my direction. I'm not going to have FOMO, right? I just leave the 1 hour candle to play out. It plays out, it plays out. Then I know it's going to come back to the key level, right? Even if price closes when price is already up here, the next candle that opens, I'm ready. So, okay, let me see what it does. If I see it going down a bit and then going up, I know that, this one is ready. Then I take it to the upside. I ride it to the upside, right? So always wait for those time frames. That's why I gave you guys that candlestick timer, right? So that you guys can always time. So, okay, when is this candle closing? Okay, it's closing in 15 minutes. Let me see how this candle is going to close at this key level. You don't want to rush. Wait for price action at the key level. Very important, guys. I cannot stress that any further. All right. And then the third thing that I said is you wanna look for confluence at a lower time frame, right? You wanna look for confluence at the lower time frame, right? At the lower time frame. Okay. So what I mean by this is this: if you see that, okay, fuck, this is a good key level at the daily time frame, you move down to the 4 hour time frame. Is the 4 hour time frame showing you the same exact thing? You're like, oh yeah, it is. You go to the 1 hour, and the 1 hour is still showing you the same thing. That means your analysis is correct. That means price is supposed to go towards that direction, because all the time frames are what? Are agreeing with you that yes, you are correct. You're seeing the same thing in all the time frames. That's what I mean, that you want to look for a confluence at all the lower time frames. So if you go to a 15-minute time frame, you should be able to see the same thing on the 15-minute time frame. How is price approaching the key level? Is there depletion in the candlesticks? Is price approaching the key level? Is there a bullish engulfing or a bearish engulfing candle in this instance, right? Very key that there's confluence at all the time frames, because that means then you can enter at all the time frames, right? It doesn't matter. Even if you actually analyze your charts on a daily time frame and you saw that, okay, fuck, this is actually a very good trade, right? You saw this key level, you saw that the market gave you an impulse, this was a correction, it's approaching your key level. You immediately, you know, like, fuck, this is a good trade. I'm gonna eat with this trade. I'm gonna really do well. So you know that even if you pump up and leverage your positions and your lot size, you know that you can make quite a lot of money from that, right? So that's just it, right? So these are the three things, guys, that you always need to keep in mind, right? Very key things that you always need to keep in mind, to say, First thing when you open the charts, obviously, you go to the daily time frame or the weekly. Remember on the previous video, I said you can start your analysis on the weekly time frame just to see what's the whole psychology of the market, right? Is the market in an overall bearish momentum? Is the market in an overall bullish momentum? Or is the market in an overall correctional momentum, right? Once you have that in lock, then you can be able to say, when you go down to the lower time frame, to say, okay, is the market in an impulsive phase or is the market in a correctional phase? If the market is in an impulsive phase or in a correctional phase, right, you know what to do. Therefore, you go and find your key levels. For example, let's say the market is in a correctional phase, you go and find your key levels to say, okay, if there's a key level, then it means that this correctional phase has a potential to come and end at this key level, right? So instead of you assuming to say, when is this correctional phase going to end? When is this correctional phase going to end? Now you have a very good clue to say, fuck, okay, that means the market needs to come at this key level for me to conclude that the market is done, will be done with its correctional phase, right? You have your what you call this, your trend lines, because that means this will be one of the patterns that we use, right? Which is the bearish flag. There's a bearish flag. Sometimes the market will give you either a symmetrical triangle or any other continuation patterns that we have, right? So you need to know that, guys, right? You need to know that. If you go and look at that the PDF that I sent you guys of pattern identifiers, right? It has the continuation patterns and it also has the reversal patterns, right? So you need to know what the market is doing. Is the market in a impulsive phase, correction impulse, or is the market going to reverse? If the market is going to reverse, we obviously know what we're looking for. That means the market has probably been moving in an ascending channel or in a descending channel. Then we know that this market needs to reverse. But where is the market going to reverse? That means the market needs to give us either a double bottom or a double top or a head and shoulder pattern, something of that sort, right? Something of that sort. For example, let me say the market was moving like this, right? The market was moving like this. So this, we call that the market is moving in a what? In a descending channel, right? So you'll see that sometimes the market will do what? The market will break to the upside, right? And then the market will come again. Already when the market comes, what is it coming to test? The market is coming to test our key level. Also, which is what? Which is the second entry, the previous day's highs and lows, right? And what are we looking for? We know that, fuck, okay, we have so many confluences. The market was moving in a descending channel, which is a reversal pattern. And the market is again giving us a double bottom, which is also the second entry that is at a key level, right? So you immediately know when price comes here, there's a good potential that price will do what? Price will shoot to the upside, right? That's the trade that we had today with Boom 1000, even though it took quite a long time and patience for it to play out the way that it should have played out. It was the same trade. Someone sent out actually their what you call this, their chart, right? And I told them that this is the same exact analysis that I had on Boom 1 case, right? I knew that it had to go up. It was time for it to go up, and it just had to actually play out the way that it's supposed to play out, and it did play out, shoot to the upside. So once you see this, you know that you can leverage. You know that you can enter so many positions. You know that when you go to the 1 minute and see what you call this, according to the Women crash strategy on the 1 minute time frame, the 200 moving average and EMA, the RSI playing out the way that they should, then you know that, fuck, you know what? I'm good to go. I'm gonna kill the market, really. Okay. So always, guys, always. These things are very key. Okay. Is that okay, guys? If we can move to the charts. Any questions before we can move to the charts?
Yeah, we can go to the charts. So on my side, I don't know about everyone else.
Okay.
Yeah, we can go to the charts, but for me, I'm seeing that it's kind of blurry. I don't know why.
No, it's fine. The screen is kind of blurry. I wonder why. I want to show you firstly on the setup. I managed to download MP4 on my laptop, man. MacBook is kind of crazy in terms of in terms of applications that are supposed to, be very good. Applications that are supposed to be very good. Okay. Can you guys see my chart?
Yes, can you see?
Yes, I can.
Yes, you can see it.
All right. So you can see that this is the H4 time frame on Euro USD, right? This is Euro USD. And what can we see with Euro USD, right? We can see that with Euro USD, it gave us an impulsive phase. This was a correction. Impulsive phase. This was a correction. Impulse correction. Another impulse breaking this key level right here, right? You can see it broke out this key level. And why did it break it? Because the market is moving in a bearish, impulsive momentum. You get what I'm saying? You see also it did break close below, came back to test this key level here, and then the market dropped, right? And you see that the market has been moving in a what? In a correctional phase, right? So where did we know that the correctional phase was going to end? We knew that the correctional phase was going to end here. That's why we plotted out our key levels right over here, right? So how I plotted out these key levels, right? I just want to show you guys how I plotted out these key levels, all right? I just want to take this out, okay? So how I plotted out these key levels is I used this low right here that the market created before it went up. So I took my horizontal line, and then what I did is where the candle opened, that's where I'll put my first horizontal line, right? You see where the candle opened, I'll put my horizontal line, and then where I have a lot of wicks or most of the wick that I see, okay, this wick is good, right? In terms of it, making sense in terms of the height of it. Then that's where I also plot the next horizontal line, right? That's where I plot the next horizontal line. Then I'll take my rectangle, and then what I'll do is then I will just, fill in my key level, right? And the reason why I'm filling in my key level until the right side, it's because I know that the market will come to the right side, right? On the left, it really doesn't matter. You can even start here where you're really plotting out the key level and taking it there, right? And the reason why I'm using the horizontal lines, right, instead of just using just the rectangle, it's because I want the key level to extend so that I know if price comes to that point, when I look to my left, I know, okay, it's coming to either test this key level right over here, right? So you can tell that the market did break to the downside, right? Creating another key level right over here at this low, and then it moved in a correctional phase. So when it moved in a correctional phase, we knew that the market needs to come and test this key level for us to have a confirmation that the market is done with this with its correctional phase, right? Then we would have taken cells right over here, hold it, right? And then you can see as the market was moving, I made sure that I draw out my pattern because this is what we call a bullish flag, right? This is a bullish flag. I knew the market will come down. This would have been an entry right here at the top where the correction ended. This is another entry also when the market closes below the what or outside of the pattern, right? Which is a continuation pattern, the full flag. This is another also entry right here that would have taken, and then our take profits can be taken right over here. Okay, you see, guys, what I'm teaching you, it only doesn't apply to synthetic indices. It also applies to what? It also applies to currencies, indices, stocks, commodities. All right, Emmanuel, I'm seeing that your hand is up. Talk to me, buddy.
Yeah. Sir, good evening.
Good evening, Emmanuel. Are you well?
Yeah. I just joined the meeting now. So from this explanation, we'll be able to identify that this market was actually on a downtrend move.
Yes.
When it got to this, your last key level before creating this correction, can we take a buy from there to the upper zone?
That's a very good question, right? We can look at that. we can look at that, right? So let's look at that.
Because I sent you
Yeah.
something like this yesterday on step index. I sent you a
Yeah.
chart on step index, and
Yes,
I did
I
ask
did.
if it was a good idea to take a sell from that zone. Same thing.
Yes. And I
I
did
had a
reply.
drawdown from that market yesterday because you later corrected me that it was on the buy movement. Instead, I was actually
Yes.
selling the movement. So I had a drawdown there.
Yes. Okay. So let me explain something. Thank you for that. That's a really good question, right? So guys, one thing you need to know, right, is that when we trade in the market, right, we want to trade only impulsive phases, right? We don't want to trade corrections. Why don't we want to trade corrections? Because you'll have a lot of drawdowns. I've explained what happens in a correction on the previous video, right? That I sent on the group, right? To say what happens on a correctional phase when the market is in a correctional phase. You'll see that there's moments where price is buying, 1 minute price is selling, 1 minute price is buying, 1 minute price is selling. That market is not good. That phase is not good. That's why we call it a correctional phase. When the market is in a correctional phase, we relax. We don't panic. We wait. That's why we have to wait for the market to do what? To end that correctional phase. That's why I was telling you guys that it's very important when you open your chart, the first thing that you want to look for, you want to get your directional bias from a higher time frame perspective. Is the market in a bullish or bearish impact? Like simple, is the market buying or is the market selling? Right? That's the first thing you need to ask yourself. Already, when we look at Euro USD, we've been seeing that Euro USD has been what? Has been selling, right? We've been seeing that it has been selling for days. It's been selling for days, right? So we need to ask ourselves, so then if Euro USD is selling, when I go down to the lower time frame, right? This is a weekly. We recognize on the weekly. Let me go down to the daily. Is the market in an impulsive phase? Because this right here, this is an impulsive phase, right? You can see this is an impulsive phase, or is the market in a correctional phase, right? And a correctional phase is what? Is this move right here. You see this move right here? That means the market is in a correctional phase. You get what I'm saying, guys, right? You need to, when you look at the market, that you need to identify that, right? Say, is the market in an impulsive phase or in a correctional phase? If you see that the market has just given us an impulse and is in a correctional phase, what are you going to look for? What are you going to look for next? You know that you're looking for another impulsive phase that's going to take you to the downside, right? This low right here didn't hold for a buy. Why? Because the market is in an overall bearish momentum, right? The market is in an overall bearish momentum. That's why this buy didn't hold right here, right? So we wouldn't have taken a buy, even though there was some good buy that took, went up, right? Creating a correction and an impulse for us to enter, right? But we wouldn't have taken this buy. Wouldn't have taken this buy because we knew that no, this buy is just creating a correction for us, right? So we would have left it, right? Even this one, you can see here when you would have taken a buy, you see you would have taken a buy, price comes back, price goes up, price comes back. So price is just playing around with you. You wouldn't have entered this trade because we know that price is in a what? Is in a correctional phase, right? So for those that are risky traders and probably you know what you're doing, you can hold, even though price is giving you drawdowns and all that. You can hold this to say, okay, if price is now it's exhausted its impulsive phase, now it's giving us a correctional phase, then that means this correction is going to end at this key level, right? So that's why I went to the weekly time frame, so that you can look to your left on the week and say, okay, on the weekly time frame, where is my key level? And you can see here where we are, where price 10, it's a key level. You can see it's a key level. Price 10 at this point before it could buy to the upside again, which makes it a very key level of where the impulsive phase needed to end and a correctional phase needed to start, going to test this key level and then coming back again to give us a sell. So always very key, guys. That's what I'm saying. It's very key. Start on a weekly time frame. Condense your charts. See where your key levels, and you'll see your key levels at your on your left side, right? Where price literally turned. Where price literally turned, guys, those are very key levels in the market, right? Because those are the levels that are gonna tell you whether price is going to still move down or price will react in that area. But always when price approaches a key level, price will always react at that key level, guys. Always react at that key level, right? It'll always react at that key level. So I hope everyone knows that, right? So also one thing to mention, right, is that with this move, if you look at even on the 1 hour, in the 1 hour it makes sense, huh? You see how price has been moving on the 1 hour, yeah? You see how it's been moving on the 1 hour, right? Never be confused to say, oh, this is an impulsive phase. That means I'm looking for a correction, and remember what I said, from a higher time frame perspective, this pair is on a overall bearish momentum. That means you're only looking for sells on this pair, right? So if you can see how even price was moving here, you can tell that there's a difference in the way price is moving from here. You can see here, it's clear, it's clean. Price is moving very smooth, right? Price is moving very smooth, signaling to us that yes, I'm on a bearish impulsive phase. Going to which area? Going to test this area. If price decides then to say, okay, you know what, I'm done with the bearish momentum, then there's a possibility that it can sell, then go to the upside, right? So always be cognizant of that, guys. Always be cognizant of that, right? When you trade. Emmanuel, I hope I answered your question, right?
Yes.
Okay. Very key, guys. Always know, is the market in a bearish or bullish momentum, right? If price is in a bearish momentum, you know that you're only going to be looking for sells. Then you need to identify it. Say, okay, is price in an impulsive phase? Okay, now it's in a correction. Where is that correction going to end? Then you know that, okay, there's a possibility that the correction can end somewhere here or somewhere. You know what I'm saying? Then you know, like, okay, that means I can, take a trade right over here. Because you see here that this was a key level. That's why price turned in. This was a key level. Why is this a key level? You can see it was tested once. Price came break, went up, came to test it again. So what does that tell us? It tells us that this is a key level in the market. It's telling us that this is a key level in the market. You see also the market came, tested it again, went up, came back to test, but not really, and then broke it, came back to give us a correction. What happened when the market gave us a correction? Price moved impulsively to the downside. Price moved impulsively to the downside. The more you see these setups, guys, it's the more like it's gonna be easier for your trading. It's gonna be more that it's gonna be easier for your trading. If you train your eyes to see these kind of movements, then it's gonna be easier for you to plot out your key levels, and it's gonna be easier for you to spot out whether the market is in an impulsive phase or a correctional phase, right? Look at this. Let me do this. You look at this. Very beautiful, guys. Very beautiful. This is the move that we've been seeing. You see, price broke. Price was in a what? Price was in a correctional phase. Came back to touch. Immediately touch it. Just touching the key level. What happened? Price, like, look at this impulsive move. Literally, look at, like, this is massive. This is really massive. That means the whole hour, you would have entered cells like nobody's business, even leveraging one lot size, 0.7, 0.5 lot size. And you can imagine what this could have done coming to this key level again. You would have been in massive profits, right? So one thing I want to show you guys is this, what I was speaking about, okay? This is what I was speaking about. When we're speaking about look for price action when price reaches a key level, right? So look at this, right? So you see that the way price is approaching this key level, what is it telling you? Well, what is it telling you? Well, it's already telling you that this market is going to sell. It's already telling you that I am going to sell. Literally, it's telling you that I'm going to sell, right? If you get your trend line like this and say, okay, you know what? This is a pattern. You're just waiting. I hate this. I hate this. What you call this? I hate the trend lines of MT4. They're so fucking weird, but it's fine, right? Already, even if I just draw one trend line, it doesn't matter even I put another. This is a correctional phase. Already, when I saw the market breaking and closing outside of this correction, what did I know? I knew that the market was going to sell. We had a key level. The market is broken outside of the pattern, which is the what? Which is the bull flag. Then the market sold. Literally, the market sold. You would have chosen to say, okay, this is where my TP is going to be. You take your profit. You out of the market. You're out of the market, or you would have held, knowing that okay, price has a potential to go down some more to the downside, right? So what you would have been waiting for, you would have been waiting for another what? Another correction to end. Here's another correction to end. This was another correction. You see price was moving in a correctional manner. You see price buying, selling, buying, selling. You don't understand what is happening. There's no movement. That means the market is breathing. The market is having a breather, right? The market is balancing itself before it can actually go again and give us another impulsive move to the downside that is breaking this key level right over here, right over there, right? And then it goes on to give us a bigger impulsive move to the downside, okay? Then a bigger correction, another impulsive move that is bigger that we are in right over here, okay? So that's what I was saying, guys. Always look for price action. How is price approaching that key level, right? How is price approaching that key level? It is very key in the market, okay? Okay. So you look at this one right over here. This is GU, right? This is GU, pound dollar, okay? Very easy, guys. This is pound dollar, right? Very easy, okay? How did we get this key level? We went on a daily time frame or the weekly time frame. You can either or, right? Whichever one gives you the best key levels. But I went to the daily time frame. I saw on the daily that there is a key level right over here, right? Price turned here to go to the upside and buy massively, which makes this a very key level in the market, which makes this a key level in the market. And when I saw this, I could see that, okay, fuck, this was an impulsive move. This was a correction, another impulsive move, another correction right over here. This is another impulsive move. When price broke this key level, price had to come here to test this key level in the sense of a correctional phase, ending a correctional phase at this key level. So when we go down to the lower time frame, it makes sense. When you go down to the lower time frame, it makes sense. What did price give us? The price gave us a star. What does a star signify? A star signifies that, you know what, price is done with its what? With its correction. That means price is ready to go down again and give us another impulsive move, right? You can see here, price broke out. We would have probably entered at the top, held it. Papa entered also when price breaks outside of this correctional phase to the downside. I don't know, guys, if anyone is confused about this, but this is as clear as it gets. This is really as clear and crisp as it gets. Yes, my guy. Peter, you raised your hand.
Yes, King. I just wanted to ask just on the same, because on our other entry that you have given us, most we're supposed to say like sell stops on top of the star candle.
Yes,
but
that's
in
correct.
that case, I don't know if it's blurry, but is it all right, like on the lower one, on the key level, the lower one, is it correct that you can also enter things like a sell stop?
On the lower one?
On the lower key level, the two lines that you have drawn, the upper one, that's where the star candle closed. Now the second one, the lower one.
Yes.
So is it all right that looking at that market, knowing that may go down, you can still put sell stops?
Yes, you can. You can, right? So obviously, this is not a a really perfect textbook star, but you can see that it did play out. We had a bullish engulfing, and that's why I'm saying you need to look at all these confluences, guys, right? We at a key level. And we know that price was in a what? Price is in a correctional phase. What we need to expect after a correctional phase, we know that price needs to sell. At this, in looking at this market, we knew that price had to sell to the downside, right? So even if after this red star that the market gave us, right, and the market came here, we would have blasted our what? Our sells at the top, right? Blasted ourselves and held this trade until the 90% rule right over here. Either you can choose to be out of the market or hold until the market, goes further down. I hope that answers your question. Obviously, some stars they won't be as clear as possible. That's why I'm saying you need to use your brain. Say, okay, fuck, we had a key level right over here. I'm seeing that the market is giving. Remember, guys, the star is signifying to you that price wants to reverse. Okay, you always need to know that even though sometimes price won't come or the next candle won't come and touch the top of your star, right? The wick of your star to sell or to buy. You always need to know, are we at a key level, right? You see this star is being created at a key level. For me, this is telling me that price was saying to us that, you know what, I'm done with my correctional phase. I'm ready to sell again. And what did it do? Price respected that. It did sell again. Enter the properties of the trend line and of the ray, then trend line will be normal. Oh, okay. Regarding the trend line. Dude, thank you so much, man. That means I've never used enter the properties and click off. Oh fuck. That means I've never thank you so much, man. Dude, I've never analyzed on MT4, dude. I've always used TradingView on MT4, so that's why. Thank you so much for that. I really appreciate that. Bishlom, yes, I see you raised your hand again. Talk to me.
No, King, I'm all right. It's all right.
Oh, you're right. Sorted. All right. Guys, this is as clear. Really, this is as clear as it comes. You know what I'm saying? This is as clear as it comes. I'm glad I can draw. Thank you so much, Emmanuel. This is so nice. This is so nice. Now it feels like I'm analyzing on TradingView. All right. So I just want to show you guys, a couple of examples. Obviously, USD CHF, it's moving very weirdly, as you can see right now, right? You see that price is in a bigger correction right now, right? Price is in a bigger correction right now on USD CHF, right? So when markets are doing this, you want to stay away from these markets and look for other opportunities that the market is giving you, right? You don't want to be stressing. You want to see the market clear as they come. When you open your chart, you should literally see, okay, fuck, the market just gave me an impulsive phase. This is a correction, right? That means we need to see another impulsive phase to the downside, right? It's as easy as ABC, right? It's as easy as ABC that this was an impulsive phase. This is the market in a correction. There's a possibility that the market can, I want to see why I had this trend line. I don't know why I had this trend line right over here. Let me take it out. Even this one. Okay, so now it becomes clear now. If I can draw my trend lines properly, you see I already have my key levels, right? So the key level that I have is right there at the top, this one right here. And I have these ones where price has recently tested, very key, right? And I have this one where price has been rejecting a couple of times. So it makes it a key level in the market. That means price will react. So immediately I can see that we've been in a bearish momentum, right? In terms of price selling, right? So that means there's still a good chance that we're still in an overall bearish momentum, right? So when I see this, I can see that the market is in a correctional phase. And right now it's creating what we call a symmetrical triangle, right? it's creating a pattern, what we call a symmetrical triangle. So with the symmetrical triangle, price can come touch the one, the trend line right over here, and then go down, but it will come and test this key level again, and then price will fall down and sell some more. Okay, two possibilities that can happen, right? Whether that means price willing to go up or price willing to come down. All right. So this is USD JPY. Okay, USD JPY. I just want to see some. Okay, I started it off on the weekly time frame. Okay, I started off on the weekly time frame, and I had this key level right over here. You see this key level where price turned. You see price was selling, price went up, and then price reversed over here, right? So that means we have a good chance that price can drop to the downside, right? It's pretty unclear right now. You can see if you look at the whole psychology of this market or how this market is, you see that this market moved in what we call an ascending channel. This is what we call an ascending channel, right, guys? For those that don't know, this is what we call an ascending channel. Why do we call this an ascending channel? Because we see that price has been moving in an ascending manner to the upside. So that's why we call it an ascending channel. So with an ascending channel, we know that it's a reversal pattern. That's why the market actually broke out, closed below, and then did what? And started selling to the downside until price actually did what? Until price actually reversed from here, which makes it a what? A key level in the market, right? Which also came to be tested. Price went up, right? Makes it a key level. So I always start my key levels, including the body and the wicks, right? And the wicks. If I see that some wicks are just too much or not necessary because they maybe were caused by news, I will not cover that 1 week. I'll cover where most wicks are, right? I'll cover more where most wicks are, and then I'll just put my rectangle right like this, right? And we know that if price starts selling, this is our target. Easy. You know that this is your target. Even if you hold this trade, and this is the monthly time frame that we're speaking about. Right now, we're on the monthly time frame, guys. If price decides to what? If price decides to sell, that means your target will be here. So you can imagine if you entered very good lot sizes or on USD JPY and you hold it up until here, what's going to happen? You'll be in deep profits. You'll literally be in deep profits, right? So obviously right now we see that price is still playing out. Right? Where is price trying to come? Price is trying to come to this key level. That means you don't do anything up until here. You don't do anything. You wait for price to reach this level. When price reaches this level, what are you looking for? You're gonna look for price action happening in this key level. You can even go to lower time frames. This is the weekly time frame. You can even go to lower time frames, see what price is doing. Then once price actually gives you that price action, breaks outside of that, this bull flag, then we know that price will be ready for us to take us to the what? To the downside, right? Let me see another one. This is a USD CAD. Okay, but it's fine, guys. Let's check it. Let's check out MT5. Okay, but I hope everyone can see that this, guys, applies whether you're trading synthetics, whether you're trading volatility pairs. Synthetic, it applies, guys. It legit applies, right? It legit applies. Okay. So this is what volatility 100 4-hour time frame. Very volatile pair, this one. Very volatile pair, this one. All right. But what we can see here is that, price was in an overall bullish momentum, right? That's why it actually gave us what it gave us right here. That's why it gave us what it gave us right over here, right? That price went up in an impulsive move, and then this was a correction, right? This was a correction that price gave us, and then we knew that price was going to end here, or we're gonna start buying right over here and hold this to the upside because this was a key level. Why was this a key level? Who can tell us why was this a key level where price rejected here?
It's a key level because the price came back and retested the previous resistance from the previous impulse. If you check, yeah, I wish I could annotate, but I'm finding it difficult. But
no problem.
Yes, price always moves in phases. So if ever there's a previous resistance, if it impulses, it breaks, comes back, and retastes the previous resistance. At the same time, I think it's called a breakout and retest. So if you check, yeah, there's a previous resistance, so price came back and retested. That makes it a very key level.
Pretty much. Thank you for that promise. I appreciate that. All right. Very easy and simple, guys, right? Very easy and simple, guys. Once you know this, you'll start seeing the market differently, right? You'll start waiting for good setups, right? You'll start waiting for setups to play out also very well. So we're already seeing that this was an impulsive move to the upside. When the market turned here, we knew that this was a correction that needed to end at this key level before we can go up again, breaking this key level, going to create another new key level at the top, right? But if we look, I think to the left, there is a key level right over here. You see, price tested here, 1, 2, right? Came back again the third time. That's why price is selling right now, right? So very key, guys, right? That even here we thought, okay, probably price is gonna go to the upside and continue with its bullish momentum, but we see that price actually broke to the downside when it gave us this correction that it was in. This was just price correcting, right? This was just price correcting right over here, right? Giving us more or less what we call a symmetrical triangle. And then price broke to the downside and went up. I think when we saw this, or when I was looking at this, I was naive instead of looking for buys only and not preparing for either a buy and a sell setup, right? Because at what price was doing here, there was either or, right? Either price was going to buy or either price was going to sell. If price was going to sell, I was expecting it to come to the key level again to give us a double top and then shoot to the downside. But instead, it gave us a symmetrical triangle. Then it shot to the downside, breaking this key level that it actually created, dropping, coming to test this key level, coming back, test this key level, and then going down again, right? Quite easy to see and spot out if you know whether price is moving in an impulsive phase or a correctional phase, right? This one is crazy. Honestly speaking, Boom 1000 is crazy, guys. I won't lie. This is madness, what it's doing. And this is what we can expect sometimes on price, right? This is what we can expect price to do, right? If you get to look at Boom 1000, this is just madness. This is just madness, honestly speaking. It's just, I hate when price doesn't respect structure. Like legit, it doesn't respect structure. Because when it broke out the first time, we're like, oh, okay, great. We're gonna go up, right? Came back again, okay, maybe it wants to give us a double bottom to go to the upside. We did eat some pies here. Obviously this was not a steak, this was some pies that we did eat. But look at it again. It's coming, this thing, guys, I don't know. When Bryce does it, I'm just out. I just get annoyed. Like, you know what? It's fine. Do what you have to do, eh? Do what you have to do. What is this? Boom 500. So Boom 500 also, the reason why it's selling, it rejected at a key level, right? I know there's some guys that do trade against the spikes, right? Of which is still valid. If you're seeing a good setup, it's still good, right? Because if you can see the way Boom 500 has been moving, it's in an overall bearish momentum, right? It's in an overall bearish momentum. You see that price has been moving in an impulsive phase correction, impulse correction, right? impulse correction, impulse. This is just the market giving us a bigger correction where price is selling. And I think it's going to sell up until this key level, right? It's going to sell up until this key level and probably even come down to this key level that it created right here when it started its correction, right? So obviously, for me, yeah, you see, even when you look at it at a higher time frame, it even makes sense. When you look at it at a higher time frame, it even makes quite a lot of sense. Why price is actually selling, right? Actually makes quite a lot of sense if you look at it in that manner, right? Look at this from a daily time frame perspective. That boom 500 has been selling since August 2021. Since August 2021, boom 1000, boom 500 has been selling. You see it did sell. This is what we call an impulsive phase. The market was in an impulsive phase until what? Until September. Yeah, until the 28th of September. Then price entered into a bigger correction. This was just a whole bigger correction that the market was in. Right? Market then started moving out of that correction, meaning with its impulsive move to the downside. And that's what we're seeing right now. So even right now, we can see that this was more or less a correction. This buy was a correction, and then this is another impulsive phase to the downside, right? So sometimes when you see the market doing this, if you do not trade against the spikes, then you can stay off such a market, right? You can stay off such a market. So here's Cash 1000, right? Very stubborn also this one. Very stubborn this one. Very stubborn. It's quite a stubborn pair, right? But I want to show you guys something, okay? So what we're seeing with Crash 1000 here, right, guys, is what I was telling you, the pattern identifiers. You can tell that the market has been in what we call a descending channel, right? And the reason why it's a descending channel, you can see even how the trend lines, they align. The price has been moving in a descending manner, right? So therefore we knew that price has a potential to do what? To reverse to the upside, right? And start buying again, because this price has been selling since 4 October 2020. 4 October 2020. We've been on this sell trend on Crash 1000. And now we're on what? This ended 26th December when price started doing what it's doing right over here, right? The bigger time frame, guys, will always give you an overview what the market is doing. The bigger time frame, guys, will always give you a sentiment of what the market is doing, right? So even when you go to take your trades, you will know what you're actually looking for. Even when we take sales here, we don't take sales randomly. We want to take sales that are what? At a key level. Like here, we knew that this was a key level because this has been tested before. You see price moved from this level before, right? So it made sense that price actually reject here, come back to test this key level, then continue with its buy movement to the upside, right? So once you see this, guys, you can't unsee it. Once you see these kind of setups, you can't unsee them, right? So obviously what price is doing right now, obviously it wants to sell, come here and then start buying again. Because now it wants to give us a what? Another correction, right? It wants to give us another correction. So where is this correction going to end? We know that this correction can end at this key level that the market has created, right? At this key level that the market has created right here. So if price decides to do that, that's fine. We wait for price to come here, then take a buy to the upside. If you like that. If you like trading spikes, then you can go to the 1 minute time frame according to the boom and crash strategy, and then take it to the downside. Find a very good opportunity. RSI reaches your extreme sell, you enter your sells, it will take you to the downside until here, you take your profits, you're out. Simple. Take your profits, you're out. This is Crash 300. this pair moves very weirdly, but it pays quite a lot, guys. Moves very weirdly, but pays quite a lot, right? It's been moving in a very weirdly fashion, but yeah, you know, sometimes price has a weird way of moving, right? But we can see that this was an impulse, this was a correction, but then these are the corrections that extend. That's what I'm saying, guys. In the market will always evolve. Patterns always evolve. So you always need to know what you're actually looking for, right? Patterns always evolve. If you know from a higher time frame perspective that the market is in an overall bearish momentum, impulsive correction, impulse correction, impulse correction, impulse, you know that you can be expecting another impulsive move to the downside. But I just like how on the 1 hour time frame, price just went to the key level, right? Rejected the key level, came out of that key level, and look how it's been selling. It's been selling literally like cats and dogs, right? Broke out of the key level, came back to test out the key level, down, came back to test the key level, down, right? We can even say that this was a correction if we'd have to put it in this manner, right? If you are more of a not a risky trader, you would have waited for price to break outside and close outside of this correction, because this was a correctional phase, and then you would have taken a sell to the downside, give you the 90% rule, you're out of the market, or you can continue holding it. Okay. Oh, what a beautiful trade, and we missed it. But what I was waiting for here, guys, is I see where it turned. It turned before it can actually come and test the key level, like, you know, at the top, the recent key level that price made right over here, right? For me, that's what I was waiting for, actually. Because remember, we took this trade. Remember this one, we took it. That gave us a double top. We took this one, right? And exited right over here. I think we exited right over here. So when it came back again, I don't think I had a chance to actually look at it to say, okay, I thought price was going to continue again with its bullish momentum to the upside, right? Until price actually broke outside of this, this more or less correction phase, if we can put it in that way, to go and sell to the downside, right? We could have capitalized on this move because we could have entered at the when price broke and closed outside of this trend line. We would have had our first TP right over here. If you're a risky trader, you would have held until the second TP, and legit we would have been holding this for the whole day, because if you look at the 1 hour, this is a 1 hour time frame. That means this market has been literally selling the whole day. This market has been selling the whole day, guys. That's why I'm saying, guys, there's power. You know, if you guys are smart, if you look at volatility, synthetic indices, around 2, 3, 4, that's where the money is, guys. I think I'm gonna start probably hosting sessions at about 4 a.m. Honestly speaking, I think I'm gonna start hosting sessions around 4 a.m. If you look at what price did here, right? Let me show you something, right? You see this candle that is on my period separator. This is the 2 a.m. candle. This is when the 2 a.m. This is when the market closed and opened, right? 2 a.m., 3, 4. This is the 4 a.m. candle. This candle was telling us that, guys, I'm ready to fly. And what happened? We could have held this trade up until now. Legit, we can safely say that the market has been selling the whole day for cash. We can say that the market has been selling the whole day for cash. Just hold on for me, guys. Just want to set up the meeting with another lifetime VIP. Okay. I don't know if you guys are clear with me. Would you guys wake up? I know some of you guys obviously have 9 to 5s. You have, you know, jobs, and some of you are just lazy to wake up at 4 a.m. But if you guys are not lazy, if I can have guys that are winning, people that that are willing to try this out, just to see how beneficial this will be, right? How beneficial this will be.
Comes
So that means
first.
you get what I'm saying? If we wake up at 4 a.m. and have class at 4 a.m., we can be able to we would have caught this move, right? We would have caught this move because that means we would have analyzed this pair on a fresh new eyes to say, okay, we have fresh pair of eyes. What is price actually going to do? And we would have caught this move very nicely. But I want to see actually if it's a continuous trend.
King,
Emmanuel, you always do it.
I think we can get up 4. I think some of us can get up 4 and start analyzing the market.
Yeah, I think so, guys. I really think so. I think we can do that. Honestly, I think it's doable.
Yeah, we can try it.
We can try it, yeah. So, guys, let's start it. Let me see. Let's start it next week, Monday. Let's start it next week, Monday, right? And then I think I want to at least try it for 2 weeks, just to see what will be our winning ratio. For that 2 weeks.
Agreed.
You know, just to see what will be our winning ratio at this point if we do that, right? Literally, because I think there's power in the morning sessions, guys. I think there's really power in the morning sessions. I won't lie. So, and I think we will know only if we try it. If we don't try it, then we'll never know. You know, if we don't try it, we'll never know whether there's power in there, right? This was a beautiful start price. That would have milked, guys. Would have milked, right? But I hope everyone, guys, understands, right? This thing. I hope everyone understands. This buy also, your step index is crazy. But what I like is what I've seen that it has been able to respect key levels so well. That's what I like about it. It has been able to respect key levels so well. And I think it's because we knew where the market is going, right? It has been able to really respect key levels very well. So the reason why we took this buy, remember we took this buy a buy today, right? It was on this 4-hour candle. You see this 4-hour candle that closed weird. Fuck, man, I was expecting the market to really go up. Like from this candle, from this 4-hour candle, I thought it would close bullish and then take us to the upside. But well, price did what it always does, came down, closed here, came back again. I was like, fuck, I'm closing my trades, I'm out. Right? But you can see that it has been able to really respect key levels for so well. This is a key level because price at 10 here. So the second time it came here, I waited for this candle. You see this 4-hour candle? I waited to see how it closes. You see how it closes, guys. This is a rejection candle. If you get to learn about candlestick patterns and price action, very key on how candlesticks close at a key level, right? This was telling me that price is rejecting going to the downside. So I knew that we would have an opportunity to take this to the upside. And we did. We did eat something here. You know, it gave us some crumbs. We did eat. And then, you know, some of us went out to break even, which is fine. Because I like to hold my trades, you know. That's why we analyze at a higher time frame. The higher time frame will give you opportunity to make quite a lot of money, even if you use the lowest lot sizes, right? Obviously, we know that step index is very volatile. Even if you use the lowest lot size, which is what 0.2, you use probably 5 positions on $100 account size. You know, this would have given you up until here. This would have given you good profits. You can imagine then if we would have went our direction immediately to this key level right over here, would have been in massive profits. Would have literally been in massive profits because of this, right? Even if you use 5 positions, lowest lot sizes. Okay. Okay. There's another one that we missed. VIX 25 1S. I remember we took this trade, man, but I think we're too early. We're too early on this trade. I remember we're too early. I remember I had my key level right over here. I thought this was a key level right over here. Right? I thought this was a key level right over here. You see this level right over here? I thought this was a key level, right? I had marked out my key level. Let me just use this actually, because this thing is wasting my time. I had marked out this key level right here. I thought this was a key level and the market is gonna turn. But I had missed out this key level right over here, right? I missed out this key level right over here. You see this wick right over here, the market coming back again, testing it, and then I had missed that key level. I was just too happy that the market is gonna actually do what it's actually doing right here, right? I was happy that the market is gonna do what it's actually doing right over here. And then obviously, we lost it, right? But you see how it came to this key level, rejection candle, very beautiful rejection candle, closed outside of the key level, fuck, and then it just shot up very beautifully to the upside. Shot up very beautifully to the upside. Super beautiful trade. Super beautiful trade. Would have even caught this one. You see at the market close. You see price broke, closed outside of the pattern, right? Which was a bullish flag, and then came back to test, and then it went up, literally shot up. But anyway, that's fine. We shall never miss the setups again, We don't want to miss such good setups. This was a very good setup. You guys can see it, huh? Very good setup. You can see that the market moved impulsively to the upside. This was a correctional phase that the market was in. You see the market is indecisive. That's how you see that we're in a correctional phase. 1 minute you're buying, you see a lot of stars. 1 minute you're selling, 1 minute you're buying. You don't understand what is happening, right? And then you already know that, okay, fine, the market needs to come to a key level. That's where my interest is going to be, to take the market to the upside, right? And when it does this, you're already plotting out to say, okay, this is this pattern. I know the market is going to end here, right? If you were a less riskier trader for a reduced risk entry, you would have entered here. Well, when the market closed outside of this bull flag, which is a continuation pattern, you would have entered here and took it to the upside, right? To obviously catch this key level, right? Or, when you go down to the lower time frames, you'll see there's also other key levels that you see that you can also use as your TP, right? So, okay, my TP1 is here, my TP2 is here, until the price reaches this level right over there, right? Volatility 75 has been moving quite weirdly. I won't lie, guys. It has been moving quite weirdly. If you can see that we are in a more or less a bigger correction. We are in a bigger correction because you can see that the market gave us a very beautiful impulsive move to the upside. So we're expecting another impulsive move to the what? To the upside again, but it's moving very weird. Bislomius, I see your hand is up.
Hey, King. I don't know how, if it's my, I think it's my keyboard that keeps on pressing.
Yes, I think it's your keyboard. I think it's your keyboard, no problem. Right?
Yes.
So
right.
we see that, no problem. We see that volatility 75 really, it's in a more or less a correction, and it's hard to trade in such a market. Very hard to trade in such a market, right? Because price is not giving us a clear move of where it wants to go. Price is not giving us a clear move of where it wants to go, right? But if you can look at one of the examples as we're speaking about the strategy right here, you see that the market gave us an impulsive move to the upside. Then this was a correction. Market creating a what? The market creating a key level, right? The market creating a what?
A key level.
Key level, right? I just want to do this. Just hold on, guys. So when it created a key level right over here, would have plotted out our key level at the close of where the candle opened. Also respecting the wick, very key. Also respecting the wick. You can see here the market came to that very wick. Previous days highs and lows, guys. Papa, highs went up, easy, right? Easy, 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 easy. If you see these setups, you cannot unsee them, right? So you see that if we go to a lower time frame perspective, Let me say the H4 time frame. Let's see if we're able to see that. Is this the one? I hate when I do this and price is doing this. Okay. All right. I think this is the one. Yeah, I think this is the one. Hey, where am I? Okay. This is the one. All right. This is the one. Okay. So you see that price gave us a very beautiful momentum to the upside, right? This was an impulsive move to the upside. Then this was just price correcting itself, right? That's why we're drawing this as a what? As a pattern to say price was doing what? Price was correcting, right? Price did what? Price broke out, came to retest, and then price shot to the upside, right? So even with these trades, guys, if you're very confident in yourself and you know what price is going to do, you won't panic when price retraces because that's what the market makers like to do. They like to bring price back to your entry, making you fear like, let me close, FOMO. And then after you closed on 11 cents, 11 US dollar cents, and then price decides to go your direction. That, oh fuck, I would have made $200 on this move. Your fear messed you up. Your fear messed you up. So you didn't catch the move, right? If you know and you're confident about your what you call this, your setup, don't fear retracement. Why are you fearing retracement? If price hits your stop loss, price hits your stop loss, right? This is a game of probabilities. That means then your thing, your setup is invalidated, right? And that happens in the market. We cannot always win in the market, guys. If you are not ready to fail in the forex industry, then you are not ready to grow as a forex trader. It's that simple. If you are not yet ready to fail in the market, then you are not yet ready to become a what? A proper forex trader. Until you get to accept and learn from your mistakes, then you will always be in that fear of losing. Oh, what if I lose? Oh, hey, this is my last $20. If the $20 flow, let it flow. Let it flow. Because there will come a time where you will stop blowing those $20. Let me say you blow $20, but you'll know that tomorrow you're gonna make 1,500 US dollars. Tomorrow you're gonna make 2,000 US dollars. Tomorrow you're gonna make 500 US dollars. You get what I'm saying? So if you have that mentality, then you know, sorted. I see two hands are up. Promise, your hand is up. What
Yes,
up?
I wanted to go to date back to a few things. Let me just go back to the previous video.
No problem.
It first comes to something that I don't know. I haven't really come across it because I've been searching for it on Google. You keep mentioning it even from that live you did on Instagram. The 90%. What is it exactly?
Okay, I'll explain to you what is the 90% rule. Okay, so this is a perfect one. Okay, so what we're saying with the 90% rule is this, right? So we see that price gave us an impulsive move to the downside, right? And then price started doing what? Price started correcting from where? From this level right over here. You see? You see it this week. This is where the correction started, okay? This is where the correction started. So we're saying that, right? Since we trade impulses, we're saying that after a correction is done, when you enter your buy, there's a 90% chance that price is going to come back to where the correction started. So that's why we call it the 90% rule, that there's a 90% chance that after we move out of this correction, price is going to hit our TP1, which is always at our 90% rule. I hope that makes sense.
Yeah, it makes sense.
Right? We can even take it with this one right here, right? This is the one I wanted to show you guys, right? We can even take it with this one. You see that price was in a correction, right? Price was in a correction after giving us this impulsive move to the upside, okay? Price was in a correction after giving us this impulsive move to the upside, right? And where did this correction start? we can see that this correction started where? Right over here. What happened? Price did come, test this key level, and told us that, okay, I'm done, guys, with this correctional phase. I'm ready to buy. What happened? Price did buy to the upside, came back to the 90, where the correction started. And that's why we call it the 90% rule. There's always a 90% probability that after a correction is done, price will go and hit your TP at the what? Where price started correcting itself. Okay.
Yeah, makes
Thank
sense.
you so much for that question. I appreciate it.
Okay. Is there anyone who wants to ask before I ask another question?
Yeah, can I ask? I don't know where to raise my hand. I can't seem to find it.
It's okay, mate. You can go ahead.
Okay. Now, to establish the general trend of the market, that is to establish the direction of the impulse move, what time frame do you look at? That is the first question. Then the second question is, do you use the moving average to determine, or you just eyeball and like say it's going down or it's going up?
I'm not using, okay, so thank you so much for those questions. I really appreciate it, right? So like I always told you guys in terms of time frames, right? So I'll start my analysis on the weekly time frame. I'll start my analysis on the weekly time frame, right? And the weekly time frame, let me see another pair. Let's look at another pair. We spending too much time on volatility. Okay. Like I always said, right? You can start your analysis on the weekly or the daily time frame, right? I actually wanted a team chart. These key levels when you go to certain time frames, they're bad. Okay. So when I look at the market, I'll always start either on the monthly or the weekly time frame, right? And on the weekly time frame, I should get a good vibe of what the market is doing. Is the market in an overall bearish momentum, or is the market in an overall bullish momentum, right? So that helps me to know when I go to the lower time frame what I'm actually looking at, right? Do you recommend indicators to confirm reversals or breakouts? No. I don't use any indicators, guys, unless it's for boom and cash. And on boom and cash, we only use the RSI and the moving average 200 and the moving average 10 on the 1 minute time frame, right? If you guys don't have the boom and cash strategy, I'll resend it again on the group so that everyone can have it and then you can go over it, right? But I don't use any indicators besides for boom and crash. So when I look at the market, I will start on my weekly time frame, right? Already when I look at volatility 101S, I can see that volatility 101S has been in an overall bearish momentum, right? You can see this was bearish momentum, then gave us an impulse of it, and then this was correction, impulse, correction, impulse, correction, impulse. That's how the market has been moving along, right? That's how the market has been moving. So on a bigger time frame, I already have a view of what the market is moving like. Okay. And then you can move to your daily time frame, right? So in this instance, right? In this instance, I can see like, oh, okay, the market gave us a double top, right? In this instance, the market gave us a double top. Beautiful. That's a very good reversal pattern, right? And it did play out very well. It did play out very well to the downside, right? But when price was coming to the downside, price was also moving in what we call a descending channel, right? Price was also moving in a descending channel. What is a descending channel? A descending channel, it's a reversal pattern. It's one of the reversal patterns that happens in the market, right? It's one of the reversal patterns that happens in the market, right? So obviously, I was expecting that price is going to reverse at this key level right over here. I'll just put a line, okay? I'll just put a line right over here. But you see that price that went down, right? Invalidated this this key level. I was like, okay, then maybe price wants to create its own key level by giving us a double bottom at the lower time frame, right? So when we go down to the lower time frame, we see that price did give us a double bottom formation. before it actually went to the upside. Okay, you see that price gave us a what? A double bottom formation, and then price decided to change direction. And we know that it should have changed direction from a what? From a higher time frame perspective, right? So answering your question in terms of time frames, right? It is that you need to know what is the whole sentiment of the market from a higher time frame perspective. The higher time frame, that's where the money is, right? That's where the money is. So even when you look at the chart, you need to know, like, okay, what is price? Oh, prices has been moving in a bearish momentum. That means this is a descending channel, which is a reversal pattern. That means this price will need to what? Price will need to buy to the upside. When you go down to your lower time frames, which is the H4 and the H1, what you'll only be looking for is you'll be looking for that reversal pattern. Are you looking at is price giving you a double bottom? Is price giving you an inverse head and shoulders, right? Then from that, you will know whether price is going to the direction that it needs to go from your bias on the higher time frame perspective. Okay, I hope that answers your question, Elaine.
Yeah, it does. Thanks.
Okay. All right. Any other question, guys?
Yeah.
Yes, promise.
The second question goes back to the previous video as well. Just for you to reiterate a more clearer understanding regarding the notion you mentioned that we sell at the previous day's high and buy at the previous day's low.
Yes.
You know, we were going to the charts by the time you cut off, trying to explain how do you apply that to a real-time chart to be able to understand what that practically really means. I don't know if you can get back to that. And
not a problem. Okay. And this right here, what you see, right? What I just showed you here on volatility 100 on S. This is legit the previous day's low that the market tested, and then that's why the market actually bought to the upside, right? But let's look at volatility 75 to see if we can actually find a very good example of a previous day's high or a previous day's low, okay, that we can use. All right. And I said on the 1 hour, you see this high right here. There's a recent one that I can show you. You see price created this high right here. Price never came to test this high. Today it came back, and what happened? Price sold to the downside, right? Remember what I said in terms of the rules of if you get this previous day's high and low, you know, your target will always be about 1,500 in pips. And you see price did hit the 1,500 in pips, right? As your TP1, right? So that's what you actually look for. And you see price did come back again to that high, but then it bought for a bit, right? That's why I was saying that the third time price comes to that high, you never want to be involved in this, right? Treating it as saying, I'm going to sell here to the downside, because price can choose to what? To buy to the upside, or it can come back and sell, right? As I've explained yesterday, right? So I hope that answers your question. I just want to find another one also. Another one that I once saw. Even if you look at where price turns most of the time, you know, it will always be at, you know, previous days highs and lows, of which also we mark our key levels there, right? Of which we also mark our key levels there. So okay, this is the key level here. That means price is going to react when it comes to that point, right? So for me, I've learned to actually include my previous day's highs and lows on key levels, right? On key levels, and see how price reacts in that key level, and then take it to the upside or either the downside of the market, right? But this is what is, especially on the 1 hour time frame, you'll be able to see these previous days highs and lows very clearly. I see there's a lot of hands. Emmanuel?
Yeah, yeah. So my own question is in support of what this man just asked. On trading that previous day's high, maybe the price created a high the previous day. Then on that present day, price goes back to that previous day's high to retest that particular spot. Do we just place our sell, or we look for like rejections first before we place ourselves?
That's a good question. So, thank you for that question. So it's very possible that, let me show you this side. Let me show you this side, right? On the 1 hour. It's very possible that price can create the high the very same day and still come to that high the very same day, right? You see here, very possible that price can create the high, come the very same day on that high, and then sell to the downside, right? And this is what happened here, creating a W formation, right? And then this W formation was more or less also creating a W formation going to the upside. You get what I'm saying? So it's very possible. And when this happens, it's a risk entry. You legit want to enter, because this is a sniper entry. You legit want to enter at that high, right? Or instead, you can then go to your lower time frames, right? You can go to your lower time frames, either M30 or M15, to really get that sniper entry, right? To get that sniper entry. And you can see that on the lower time frame, on the M15 time frame, you can see that price stopped here, sold for a bit, came back to test it again, and then continued to the. So this was telling us that yes, I'm actually going to the downside, right? Another entry also would have been at the break of this one of structure. At the break of structure, then you would have you can enter at the break of structure, because price has given you a signal that fuck, I'm going to the downside, catch me or not. Then you would have entered here. You can see at the close of this candle, this one opens, you would have taken a sell, would have taken you to the downside until this key level that was there for price to create a W formation again to the upside. Okay. I hope you guys understand that. But if you also treat this previous day's highs and lows in terms of your as a zone instead, right? To say okay, this is a key level that the market has created. So that means when price comes to that key level, you're looking for price action as price approaches that key level. Because most of the time, what will happen is you'll say, you cannot always be taking risk entries that are gonna put your account in jeopardy, right? You always wanna be sure, you always want to have more confluences than one when price reaches that key level or that high or low. Say, okay, is price giving me necessary price action in this area? Even if you go to the lower time frame, 15 minutes M30 time frame, there should be a confluence. Price should actually be giving you a story to say, yes, I'm giving you these rejection candles because I want to go down. I'm giving you these rejection candles because I want to go up. Okay, so I hope that makes sense.
Yes.
Okay, super. I think we went. It's 12. Damn, guys, that means we had a long meeting. Hey, 10 to 12. That's over 2 hours that we've been having a meeting. But I hope everyone was able to get the gist of the strategy, how I get to actually view the market. This video obviously is going to be up on our Telegram channel that you guys can be able to review and go and check, every day or whenever you need clarity, right? But you can see, guys, that, if you get to see the market in this way, of saying, is the market in an impulsive phase or is the market in what you call this, a correctional phase? That actually gives you clarity of actually what the market is doing. That gives you clarity of what the market is actually doing, right? And when you know that, then it makes your life very easy. Wayne, it's for lifetime VIPs. I ain't when you got the strategy. It's for lifetime VIPs, bro. All right. So whenever you see the market in that sense, then you know it actually makes it quite easier, right? It actually makes it quite easier. But Wayne, I'll send you this video also since you got the strategy. So fear not, okay? I'll send you the video. I'll send you the video so that you can also have this video as a strategy basis, right? We missed volatility 25, guys. Also, I saw it like I don't know. Yeah, like I was doing a lot of things today. We missed this was such a beautiful trade, guys. Fuck, this was such a very beautiful trade. Super beautiful trade. Very beautiful trade, man.
Wanted to
Super
ask,
beautiful. Yes.
on V25, I'm currently trading it. I just wanted to know, for understanding's sake, since this is real time, that where it's on a zone, right? If you go like on a 1 hour time frame, it's on a zone. So how do you execute a trade where it is like that? Do you enter or you wait until it goes below that's mini correction? Because as you can see, it's on a zone on the extreme left there on the trend line, the first trend line. How do you react to that market?
So you're saying where it is right now, like this?
Yes.
Okay. All right. People are coming in, going out, coming in. Hey, it's nice. Okay. I never saw it that way, but that's a really good one, dude. That's a really good one for us to check it out. Okay. So you're saying where it is right now?
Yes.
What is price? Going to do? Where do we enter when price is doing this? Very good question, right? So we're on the 1 hour. For me, I would wait for the 1 hour candle to close. There's about 50 minutes to go. For this 1 hour candle to close, right? In order for us to know, is price going to, if this candle closes below this key level, because it is a key level, as you say, because you see price did test it, came back, tested it again, broke it, came back again, tested it again, then went up. So yes, it makes it a very valid key level on the 1 hour time frame, right? So if this candle closes below, right, this key level, then there's a good chance that this price is going to go down to this key level right over here, right? That's why I was saying that you can have these TPs. When you go to the 1 hour, the 1 hour will give you more key levels that the market are creating, but the key levels that actually hold really that really hold very well. They're on the daily time frame, the H4 time frame, the weekly time frame key levels. But the ones on the H1, you can use it as your TP levels. So okay, the market is gonna have a break when it comes to that level. Then you'll know that also that's a spot or a key level where you can scale in, meaning you can enter more cells again, right? Let me say maybe we would have taken it on the upside. Enter on the upside. This was a key level right here. You see that price did have a bit of movement here. We would have entered right over here again, right? Hold it to this key level. This key level, once price breaks and closes below this key level, then we enter again, take it to the upside. And that is called the power of leveraging, right? That is called the power of leveraging because we're using the advantage that price is going to the downside because it's in an overall bearish momentum, right? It's in an overall bearish momentum. We see that this was an overall correctional phase that price was in. That price wants to come again to this key level right over here. So if you're confident that price will come to this key level, then that means price is going to sell at this point. But we need to wait for that 1 hour candle to close below this key level to take it to the downside. Because right now we can be confident and say, okay, we know what's going to happen. Price is going to sell. And then price surprises you, it goes up. Come and test this key level right over here. And you're like, fuck, this thing blew my account. Is it blew your account? Why? Because you are not patient enough to wait for this 1 hour candle to close to see how it closes. Will it close above or will it close below? If it closes above, then that means we are in for what? For a correction, right? We are in for a correction. We can be looking at this. We can be looking at something like this for price to come, test that key level like that. We can look for that. We can look for price to do that, right? And then wait for price to come here, break out, and then take it. Then we will know that price will break this key level to go to the downside and go and hit the key level that is on the daily and the H4 time frame. Okay, so always very key. Always for if you're seeing a key level on the 1 hour, wait for price. Like you wait for price to see how is this 1 hour candle going to close, because that's gonna be very key to how you enter the trade. Okay, very key, guys. All right, thank you so much for that question. I really appreciate it. Is there another question, guys, before we close?
Yes, sir.
Yeah.
Sir. Yeah, sir. In most cases, I observe that during the course of practicing, maybe sometimes I get to like spot a chart pattern. Maybe it is an ascending triangle, descending or symmetrical triangle. In some cases, my 1 hour candle might have closed outside of my pattern. But my 4 hour candle hasn't. At the end of the day, it will just give me like maybe a little profit. Then after the long run, the 4 hour candle will close back inside the pattern, then put me on drawdown.
Yep. Very key. That's why.
So in such case, are we supposed to wait for the close of the 1 hour candle or the 4 hour candle?
Guys, that's why it's very key. Thank you for that question. Thank you actually for raising that question. Let's go back to the time frames, guys. Okay. For me, guys, the biggest, the most profitable time frames is the 4 hour time frame and the daily time frame. How the 4 hour candle closes, guys, it's very important. Very important. So important how the 4 hour candle closes, right? The 1 hour, it can give you, like you said, it can give you those small profits, then come back again. You're like, why is this candle? Because the 4 hour candle is not done. The 4 hour candle is not as yet done, right? So the money, guys, literally, I'm telling you now, the money is in the H4 time frame and the daily time frame in terms of how the candlestick closes, because the 4 hour holds really good momentum. The 4 hour really holds money, right? You look at this candle right here. You see this? You see this 4 hour candle closed, right? This one was going up and down, but look how it closed, right? It closed telling us that sellers are taking charge. They say we are still in the market and we want to take this market down. So this was a good signal to say the next 4 hour candle that opens, what is going to happen? The market is going to sell to break this key level, right? To the downside, and the market did do that, right? So I think for me, a lot of times, right, if I should be honest, a lot of times where I've had losing trades or I've entered prematurely, it's because I've looked at the 1 hour. I'm like, hey, let me see how the 1 hour is going to close. Because it's an easier time frame in terms of, oh, hey, this candle is gonna close bearish. That means we can go in. And then the market just slaps me like, nah, bruh, draw it down. Just like that, right? So that's why now I really, honestly speaking, guys, I focus on the 4 hour and the daily time frame. I focus on the 4 hour and the daily time frame in terms of looking for my patterns, how the patterns are how the candlestick is closing. You know, for me, that tells me that price is willing to go where it's actually supposed to go. Then it gives me confidence enough to hold that trade longer than the usual, right? Because I know that I can hold probably a trade for about 8 hours straight, right? If I can hold the trade for about 8 hours straight, I'm good. 8 hours straight, I'm good. I've made enough. I'm really good, right? I've made enough. Okay. So thank you for raising that question, and I hope everyone gets to understand my sentiments about the 4 hour and the daily time frame, right? Not that the 1 hour is bad. You can use it for entries, but to really spot out your proper key levels, for you to really decide whether you're gonna enter the trade or not, the H4, the daily time frame, very key, guys. Super, super, super key time frames in the market. You see those two time frames? Very key. I cannot stress that even any further. Very key.
Yeah, thanks very much.
All right, not a problem, guys. I think if there's no more questions, guys, then we shall close this session. And tomorrow is what? Tomorrow is Thursday. Yeah?
Friday.
Friday tomorrow.
Yeah.
Hey, this week has flown by. Hey, when you're working hard, man, you don't even know which day of the week it is, man. Thank you so much, guys. May God bless all of us in this market to see the market very differently and with a fresh pair of eyes. Hopefully tomorrow it's a good day for us that we get to see a lot of opportunities. So you see that I'm slowly but surely moving into currencies. So you're gonna be trading a lot of currencies. So if you guys can open up, account, or if you have an account, deposit some cash, because I've just installed now my MT4 properly. It's working proper. It's not giving me network problems as before. So that means we will be looking at a lot of currency pairs going forward, because there's also money to be made there. You know what I'm saying? So if we don't have opportunities on synthetic indices, we know that we can go and touch currency pairs, right? Which also can be very quite profitable. Okay, so after here, I'll save this video, let it convert, and then I'll send it to you guys right away. Okay. Thank you so much, guys. Have a good night. Get some rest.
Just one more thing.
Yes.
Yes, I think I might have lost the links that you had posted for the recommended brokers for currencies. So maybe if you can repost it again in the group.
Recommended brokers.
Yes.
Which country are you from? Which country are you from?
I'm in Zambia right now.
In Zambia. Okay. All right.
Yes.
No problem. I'll give you some recommendation. I would recommend the one that I use, which is Trade 245. That's the broker that I use, Trade 245. They've never given me any hassle in terms of deposit withdrawals. They've always given me my money nice and easy, so I don't have a problem with them. I know also in SA a lot of people use Vault Market. It's quite new. It also pays out quite well. I think they have the same day withdrawals, so you can legit. Definitely, Wayne.
Start recording. I'm just gonna record the session. All right. I think we're recording. Says recording in session. Okay. So welcome, guys. Tonight we're gonna be discussing the second entry. All right. The second entry is also quite as powerful as the first entry that we discussed last night. Okay. So what we're gonna discuss today is the second entry. Okay. So the second entry, it is based on what we call, or rather not what we call, but the second entry, it is based on previous days highs and lows. Okay. Previous days highs and lows, right? That's the whole ordeal of the second entry. All right. It is based on previous days highs and lows. So if you do not know how a high or a low is determined in the market, let me say this is a bearish candlestick, then it'll create a wicks like this, right? So obviously at the top, that would be considered as our high that the market made, and this will be considered as the low that the market made. Okay, pretty standard, straightforward, to the point. I think everyone, if you've been in the market for quite some time, you know what is the difference between the high and lows that the market makes. Okay, so when we trade the second entry, which is the previous day's highs and lows, in line with market structure and price action, right, is we have a couple of rules that we want to follow, okay, when we trade this, right? So the first rule is you sell only on previous day's high. Okay, you will only sell on previous day's high. And then number second, right? Number second, you will buy only on previous day's low. Okay, pretty straightforward, to the point, right? Sell on previous day's high, buy on previous day's lows. Okay, your stop loss will always be the same as the first entry, right? Your stop loss will always be at about 800 pips, as we discussed last night. And then your TP in this instance, when we trade in the previous day's highs and lows, is your TP will be at 1,500 pips. Okay, so once you've hit your TP of 1,500 pips, what you want to do is you want to move your stop loss to 1,000 pips. Okay, and then as the market keeps on going up, let me say it reaches 2,000 pips, you go and place your stop loss at 1,500 pips. The market hits 2,500 pips, you move your stop loss to 2,000 pips. Okay, and that we call trail stop. Okay, we call it trail stopping. Sorry about that, guys. Okay, so these are the rules that we utilize when we trading the previous day's highs and lows. Okay, you want to sell on the previous day's high, you want to buy on the previous day's low. Your stop loss will be 800 pips, your TP at 1,500 pips. You move your stop loss to 1,000 pips once you hit your TP at 1,500 pips. Okay, but now we come to a very important question. Okay, we come to a very important question of okay, just needed to mute everyone. Sorry, guys. All right, so we come to a very important question of how many, fuck man, this thing is messed up, man. Okay, we come to a very important question of, I'm gonna switch off this because people are disturbing me right now while I'm teaching. Okay, so the question that we come to is how many previous days highs and lows do we consider for the trade to be valid? Okay, for the trade to be valid. All right, how many previous days highs and lows do we consider in order for us to say, yes, this high or low, it is valid. At this low, I can take a buy. At that high, I can sell the market, right? Because it's not every low that the market will buy, and it's not every high that the market will sell. So then how do you determine whether that high or low, it is valid enough for you to take a trade, to take a couple of positions, okay? So we have two rules in order for you to know, right, whether that high or low, it is valid in the market, okay? So the first thing that you want to look for, right, is that high or low, it has to be within the period of 30 days, okay? Especially when we're trading synthetic indices, okay? That high or low, it has to be within the period of 30 days. Like today, it's the 22nd of Feb. That means we're looking at price from the 22nd of January, right? So that's our period of 30 days, okay? Even though sometimes the market can be able to turn, buy or sell at a low that happened probably last year, you know, it's possible, right? But what we've seen work is synthetic indices, they like focusing on the recent price, right? So if you are within the period of 30 days, you should be good for you to either take a sell or a high, to take a sell or a buy, right? So number second, all right, number second, what you need to be looking for is, right, that high or low, it has to not be tested before, okay? It has to not be tested before, meaning that it has to be a version, right? It has to be a what? A version, right? So that high or low that you'll see in the market, we don't want to see price having ever came there before. We want it to be clean. We want it to be a version, all right? And we'll demonstrate that as we go to the charts, okay? So the time frame that we're gonna use to determine the previous day's highs and lows that the market makes, all right? The time frame that we're gonna use is the 1 hour time frame only, right? 1 hour time frame is the time frame to use when you determine your what? Your previous day's highs and lows, okay? I hope that makes sense. I hope it's easy to follow, right? Easy to follow and follow through. I don't think right now there'll be much questions until we move to the charts, okay? So very important, guys, right? Simple rules. You need to make sure that you know these rules even by head, so that even if you don't have your notes, you can know that I only sell on previous day's highs, buy on previous day's lows. This is my stop loss, my TP. And in order for you to determine whether you're going to enter the trade, you need to say, number one, is that high or low within the period of 30 days? If it is, then great. Is that high or low been tested before? If it hasn't been tested before, then you know that you're either good for, if it's a low for a buy, you can put your buy limit there and price will take you to the upside, right? And you'll determine these highs and lows on the 1 hour time frame, okay? So one thing I want you guys to put a key tool that we use, is the period separator, okay? It's called the period separator, okay? So the period separator on the 1 hour time frame, what it helps us with is, right? Let me say this, the period separator. What it helps us with is it helps us distinguish which day is which, right? You'll see, but the lines on MT5 will be more or less dotted lines, okay? So they'll be more or less like this, and they'll be dotted lines, okay? They'll be like this, dotted lines, and these we call period separators. And on the 1 hour, they distinguish what the market did on that day. Okay, if you open your chart on the 1 hour, then the period separators will tell you, let me say this was a Monday, this was a Tuesday, this was a Wednesday, this was a Thursday, and say this was a Friday, and let's say this was a Saturday, and this was a Sunday. Okay, so the period separators, they'll tell you what the market did on these days. Okay, so for example, right, let's say that on Monday we see the market moving to the upside like this, right? Moving to the upside, and then we see the market actually turning. Sell, continue to sell, right? And then on Wednesday, we see the market in a consolidation, right? We see the market in a consolidation, also going back to Thursday with a consolidation, right? Just hold on for me, guys. Hey, where are the sprays for the mosquitoes? Have you seen the sprays for the mosquitoes? All right, sorry about that, guys. Sorry about that. Okay, so now what I want us to take out from this, right, is that on Monday, when the market turned here, the market created a what? Created a high. When the market has created a high like this, we mark this high, right? We mark this high because we know that next time the market comes to that high, what is going to happen? We're expecting price to sell again. All right. We're expecting price to sell again. And let me say on Friday, then we see the market actually going to the upside like this. And then on Saturday, then we see the market coming, touching our high. Then what we want to see is we want to see the market actually going and selling to the downside, right? Depending on how long it's going to go to the downside. But that's what we want to see when the market comes to that high. So when you get to look at when the market created that high on a Monday, right? When the market created that high on a Monday, right? I'm just going to do this. Just want to choose a different color to this in terms of explanation. Okay, so where the market created a high on Monday, you can see that on Tuesday, price never came here. Wednesday, price never came here. Thursday, price never came here. Friday, price never came here. But on Saturday, that's when price then came, right? That's why now we sold the market to the what? To the upside. Okay, so now let's say that in this instance, the market does actually come back. Let me say it's a Monday. The market comes back to this high, right? For me, this high, it's already invalid, right? This high, it's already what? Invalid. Why? Because price has come here before. Therefore, that means this high is no longer a what? A version, right? Because it has been tested before. Therefore, there is a possibility that price can come to the downside, right? There is a possibility that price can shoot to the downside, or there is another possibility that price can shoot to the upside. So I don't want to trade something I do not know. I don't want to trade something I do not know to say, oh, do I enter a buy here or do I enter a sell here, right? Remember, our rules are very clear. We only want to sell on previous days highs, and we only want to sell on previous days lows. Okay, very clear as we're in the market. That's what we do, right? When prices are high, we sell. When the prices are low, we buy. Okay, it is that simple, right? It is that simple. So one thing to be very cautious of as an exception of this, right? As an exception of this, right? To save you guys from your stop loss being blown and you not finding out proper entries, right? Is that when the market is trending bullish, right? When the market is trending bullish, meaning when the market is buying, right? You want to avoid selling the market, all right? You want to avoid selling the market, all right? It's that simple. When the market, now this is the opposite. When the market is trending bearish, when the market is trending bearish, right? You want to avoid buying the market, all right? Because those highs and lows won't hold if price is trending, okay? And how do we know that price is trending? Price will keep on creating what we call higher highs, okay? So price will do this. For example, if it's trending bullish, price will go up, correct, go up, correct, impulse, correction, impulse, correction. And that's how we know that that price is what is trending to the upside. That's how we know that, okay, price then is trending to the upside, right? So you want to avoid selling this market. So instead, what you want to do, you want to find more opportunities to buy. In this instance, you want to find opportunities to buy this market instead of you wanting to sell this market. Okay, I hope it makes sense. Until price breaks off, let me say, this channel right here, and then go down, then we can start looking for what? For sells to the downside. Can start looking for selling opportunities to the downside. Okay, so always be cognizant of that, guys, that when the market is trending, just avoid buying that market, right? Just avoid either or. When the market is trending bullish, avoid selling the market. When the market is trending bearish, avoid buying that market. Okay, so now we're going to move to the charts. Okay, we're going to move to the charts, and as we move to the charts, I'm just going to show you guys how we can be able to spot out these entries. Okay, how we can be able to spot out these entries on the H1 time frame. All right. Let's see, where's my deriv? Okay, there it is. All right. Can you guys see my screen right now?
Yes, we can see it.
You guys can see it. Okay. Perfect. All right. Perfect. So let's go to the H1 and try and look for these highs and lows that the market makes, right? So I want to find, obviously, recent ones, but obviously when you guys go and back test, you'll see that there's more previous days highs and lows that you will get in the market, right? You'll find that there's more previous days highs and lows that the market will give you. Okay, so one that I can see, it is right over here. Okay, it is right over here, right? You can see the market created a high right there, right? And you can see this high was clean. Price didn't come here before, And when price came back to this high, what happened? Price actually sold to the downside, right? So if you had to calculate our stop loss, if we would have entered here, obviously put our sell limit right over there. If we take our crosshair, go into the upside, right? Going to the upside. Our 800 pips would have been somewhere around there, right? It would have been somewhere around there. That would have been our stop loss, somewhere around here. That's where our stop loss would have been. Let's see where our 1,500 pips in profit would have been, okay? So our sell limit was here. So if we take this down, that means our 1,500 pips in profit was somewhere around here. It was somewhere around, yeah, there. So we can see if we go to that low, that the market actually hit 1,900 pips, okay? And obviously it retraced to the upside. And when it retraced to the upside, it did come back. If you would have held this trade even after the drawdown came, you would have been, let me say, maybe you exited there, you would have made about 7,000 pips in profits, right? But obviously that would have been risky. Remember what I said? Once you hit your 1,500 pips, you want to move your stop loss to where? To 1,000 pips, right? And then you just hold the trade. If the trade continues to go towards your direction, then you know that, you know what? Happiness, right? Happiness. So let's see. Another one right here. I'm going to take off what I just showed you guys. I'll show you how to enter the period separators, right? But you can also see here that this was a low that the market created, that the market had to respect, okay? You see this low right here, the market had to respect, and then price actually short to the upside, okay? Even right here, this was a what? This was a high that the market created, that it had to what? That the market had to respect, okay? It was a high that the market created that it had to respect, okay? So if you get to look at VIX, guys, okay? VIX moves in, especially VIX 75, it moves in M's and W's, right? It moves in M's and what? And W's, okay? And that's what we call the previous day's highs and lows that the market creates, okay? So you know that when the market gives you this at this low, you're going to buy. If it's a W, it will be like this. It will be like this. And then you know that you're going to do what? You're going to sell this market, right? That's how VIX actually moves, especially VIX 75. You want to really kill VIX 75, just know that, you know, this pair moves in M's and W's. All right. So these M's and W's, you can also find them on what you call this, the M15 time frame, but I just prefer to stick on the 1 hour, because the 1 hour is more probable for me. I know that, you know, the market will be able to, you know, just give us a really nice you know, entry to take, right? So obviously right now, where the market is right now, it's a little bit choppy right now. Where the market is, it's a little bit choppy. So it's very hard to tell, to say, okay, there's a low that the market made, there's a high that the market made, right? You see here where price actually turned. It was a previous day's what? Previous day's low that the market created. But you can see here it was tested before. So that's why I was telling you to say, you know what, sometimes it is possible that the market will come, bounce off from a low or a high that has been tested before. But for me, I wouldn't get in here because it's undetermined. I'll be trading what I don't know, because I'll be confused to say, well, the market can still go down or the market can still go up, right? So I don't want that confusion when I trade in the market. I want to, when I enter a trade, I am confident enough to enter the lot sizes that I use and be able to know that even if I hit my stop loss at this moment of time, but I would have followed my rules, right? I would have followed my rules, okay? So it's very simple. And this is what I was telling you guys on the M15. We move to the M15 right now. That price respects also these previous days, highs and lows on the M15. But obviously, M15, it's more for scalping, right? More for scalping. You don't want to hold the trades. You don't want to hold the trades, right? And also another tool that I use is what we call fractals. Okay, so probably you guys have seen me. You've seen fractals on my chart. Okay, so you go to insert indicators, then you go to Bill Williams, and then you'll find fractals right here. Okay, and then you can just click them. And now with fractals, what you want to do is, like I said, VIX 75 market, it moves in M's and W's, meaning the previous days, highs and lows that the market has created, right? So you'll find that the market is creating either a W or an M formation, right? And how you know that that trade is valid when you're using fractal, especially on the 15 minutes, is the market will create what we call a rectangle, right? The market will create a rectangle, okay? Let me just do this shapes. Rectangle or triangle, right? Something like this, okay? The market will create something like this, okay? So if you decide to scalp VIX 75 on the M15, this is what you're looking for, guys, okay? And I'm glad that price has actually given us on recent price, okay, that you guys are able to see it, right? And you can see the impulse that the market is moving in, right? The impulse that the market is moving in. So if you would have entered your sell limit right over here to where price is right now, you would have been at about 1,000 pips in profit, right? You would have been at about 1,000 pips in profit, still holding for your TP, which is 1,500 pips in profit, okay? And you can also see here that the market created another triangle right here, right? You can see the fractals there, right? 1, 2, 3, then the market went down, even though it came back to test here, gave you another one, 1, 2, 3, then the market went down, okay? This one, if you would have entered it scalping, it would have made you about 1,400 pips if you would have scalped this one. All right, but I don't like lower time frames. I'm just showing you guys this. If there's people who are intraday traders, they want to scalp, they want to, then you'll know that, okay, if I'm not seeing the previous days highs and lows and they're not coming often enough on the 1 hour time frame, I can go to the 15-minute time frame, then I'll be able to scalp the market pretty well, right? I'll be able to scalp the market pretty well. So Let me go to objects, another shape, to show you guys that this occurs, right? So obviously the market, you would see it going to the upside, and then when it comes here, what you'll be anticipating is the market to create another fractal, and then you take the market to the upside. Okay, then you take the market to the upside. Obviously, there's a risk entry, meaning that the market can still go down, right? It's not guaranteed that the market can go to the upside, right? The market can still go down. So when you're taking these entries, you always need to know, because people like crying a lot. Like, oh, it hit my stop loss. Yes, it's part of trading. Stop losses sometimes will be hit, and you need to be okay with that, right? You need to be okay with that. And with this move, probably if you would have held it from here, if you entered here and exited there, you would have exited with about 3,900 and 3940 pips. 3940 pips that you would have exited with, just scalping, right? This is you scalping when you come into the 15 minutes time frame, right? See another one. This is the one that we saw on the 1 hour time frame. You can see also on the on the 15-minute time frame, it appeared very nice, right? You can see that M, that W, that M, it appeared very nice, beautiful. Yeah, but you would have entered there, bigger lot size, 800 pips profit. You hold the market, and if you had held this one from until it comes to this low, which we're saying that it's where the M actually ends, right? Let me say you entered there, your sell limit was there, and you held this trade up until here. You would have made 7,600 pips. 7,600 pips. So just think about how much is 7,600 pips if you would have used what lot size that everybody can use, actually. 0.005 lot size. You can imagine how much 7,000 pips, right? 7,600 pips is, if you would have used that lot size, how many positions you would have used, okay? So these moves, they happen quite often in the market, guys. They happen quite often in the market. Obviously, some M's and W's will be much bigger, like this one. You see, it makes sense on the 1 hour time frame, but it's still the same thing, right? To say that this is an M pattern that the market is creating. This is a W pattern that the market is that the market is creating, right? Right over here, you can see it this low. You can see there's a M pattern that the market is creating, right? So that's why I told you guys about, if you know what you're trading, you won't be afraid to hold the trade, even if it hits your stop loss. It would have hit your stop loss knowing that you followed your rules. Okay, so let me say you entered here. So as you can see that when we entered here, the buy, we had a little bit of a drawdown, right? And this drawdown was about, let me just move this right over here. This drawdown was about 221 pips. That's not even a lot. 221 pips. That's not a lot, right? That's not a lot. If you use the correct lot size according to your account size and the number of positions, you would have held this trade and it would have put you in profits. That means from this 200 pips drawdown, you would have made what? You would have made 3,900 pips. 3,900 pips taking this move to the upside. It is that simple. It is that simple, guys. Once you see these things, guys, you can't unsee them. Once you see these things, you can't unsee them, guys. You can see there's another one. Obviously, this one didn't come to the downside. You can see it didn't come to the downside. Obviously, it becomes invalid because we want, we would have wanted it to come and test this week, but it didn't. Okay, you can see it didn't. So therefore, we leave it as it is. Okay, so these previous days highs and lows, guys, they even happen on other pairs that the market has. Okay, you can see on step index, this was a high. The market came to test that high. See, so if you're an impatient trader, you can see this is 1 hour candles, how long the price played in this zone before it actually went towards your direction, right? You can see, like, this is 1 hour candles. You can see this took what? 1, 2, 3, 4, 5, 6, 7, 8 hours before the market could say, you know what, yes, we can go to the downside with a nice momentum. So if you don't know what you're doing, then you would have exited this trade a long time ago, right? But if you like, okay, you know what, I don't care. If the market hits my stop loss, I would have followed my rules. This is a clean high that the market has given me. Therefore, I'm going to. Masentle, I'm seeing your hand.
I just need to ask there, if we time frame, are we still using the same rules as we used at H1?
Yes. Yes. We still use the same rules, guys. Remember what I said on the M15, it's just you wanting to scalp the market. It's just you wanting to scalp the market, right? So Carl, I'm seeing your question in terms of there's one thing that you don't understand about the previous days period. What is it that you don't understand? I think I know what you don't understand, but I just want to hear it.
The 30 days. The 30 days, because you said that I don't understand the rules about the 30 days, because you said that not every high and lows are tradable. So we have to do it within a period of 30 days. So
Okay.
that's what I don't get, because I see you doing on the previous day right now. So I thought we should count 30 days from the day we are today, I don't really get it.
All right, guys, is there someone who wants to help us with what I mentioned in terms of the 30 days? Who knows what I meant and understood what I said? I just want to see if everyone, got what I said.
Okay,
I
maybe I
think
can help. Can I speak?
Yeah, you go ahead. Go ahead, Agnes.
Okay, what I understand is that any law that is 30 days or less, as long as it's 30 days or less, it doesn't matter, as long as it's the previous law, whether it's from day 25 or day 10, as long as it is the closest one to the day that we are. That's what we consider. It's either from yesterday or the day before yesterday, as long as it is the one that is closest to the day that we are today. That's what we consider.
Yeah, that's you nailed it. That in the most simplest way. Carl, you understand what Agnes right there said, right?
Yeah, I understand. Yeah, but I'm not like English speaker. I speak French, so that's why sometimes it's complicated for me.
Yes.
Yeah.
I understand. Sorry about that, but I'm glad you asked.
No problem.
I'm glad
no
you asked the question.
Thank you.
So, guys,
Thank you so much.
With this previous days highs and lows, right? It is possible that the market can create a high the same day, come and test that high the very same day. It is still valid. Okay? It is still valid. Because why? It is within the period of 30 days. Okay? Agnes said it very well, so I don't wanna jinx it. All right. But you can see on the 1 hour, these things they appear quite well. If you want to scalp it on the 15-minute time frame, you can, but I don't really scalp it, or I don't really like scalping. I love holding trades because when you hold, you maximize your profits. When you hold, you maximize your profits. Step index doesn't have so many opportunities with this. It really doesn't have so many opportunities with this, but VIX 75, these things, they happen, bro. These things, they happen. Look at the star, but look at the drawdown. I don't like VIX 100. VIX 100 is crazy. VIX 100 is crazy. You see the star that the market gave us. I saw the star, but when I saw the drawdown, I was like, fuck it. This thing is crazy. Look at that. It goes up. Our TP2 should be run about there. You can see it went and hit TP2 and then came back again. But the drawdown that it gave us, yeah, on volatility 100, that's a lot of money, champ. That's a lot of money, champ. Okay. Let's see. So one thing, guys, about certain pairs, right? You learn that, you know, there's certain behaviors that they follow. Okay. There's certain behaviors that they will follow. You see here, this was a high that the market created. The market came to test it. But see how before it actually moved away impulsively to the downside, how it stalled at this high. You see how it stalled at this high before it can actually go to the downside, right? So with some pairs that you trade, you just need to know that. You don't need to panic. If you have your stop loss, you have your TP set, you should be at ease, right? You can go and do whatever you want to do. If the market decides to play out and put you in profits, then kudos. If it doesn't then hit your stop loss, you would have followed your rule. So it's still fine, right? So especially with VIX 100, it moves quite weird, especially when it comes to the previous days, highs and lows that, you know, the market creates. So as you back test, you guys will be able to see this properly. Okay, you'll be able to see this properly when you back test it. All right, let's see, this one also not clear. It isn't really giving us some nice previous days highs and lows. Very choppy, very, very, very choppy. Very choppy. Boom, 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 boom. There's always boom always plays out quite well. Boom always respects the previous day's highs and lows. Boom and cash. Love, 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 love. Boom and cash, man. Boom and cash will always respect the previous day's highs and lows. Oh, one thing I forgot to be putting is the fractals. The name just hits me so bad. So even if you decide to scalp, boom and crash, you can see beautiful V, market fell, just like that, right? Fell. You know, you can be able to scalp this very nicely on the 15-minute time frame. Obviously looking for sells. You know, I always look for sells on these pairs, right? You can see the market went up in a correction. This was impulsive correction. The market then went down, correction, impulse, correction, impulse, just like that. That's how the market moves. But we'll discuss this on another lesson that we'll have. Correction, impulse, correction, impulse, correction, another impulse, right? But you can see that the market is, even on boom and crash, it does respect the previous day's highs and lows that the market will make. Okay, it really does respect the previous day's highs and lows that the market makes, right? You just have to go and back test and look for them, and then, you know, you'll be able to see them. Okay, you'll be able to see these things happening live in front of your eyes. Okay, So any questions, guys? We've come to the end of the lesson. Any questions regarding the second entry, which is the previous days highs and lows? Okay, look at this. Look at this, like what we are talking about. We'll discuss that when we do the market structure. Look at this, right here. You can see this high. Sorry. This was a high that the market tested before. Okay, can you see it? See that this was a high that the market tested before. The market went down. Look, when the market came again for the third time, what happened? What happened? Do you see what I'm talking about? That you want to avoid taking another sell when the market comes for the third time to that high or low. All right. So people that trade support, obviously, this is a key level in the market. This high, it's a key level in the market. And you can see that after the market broke out, the next candle that opened, it came, what some people would say, to retest this level. And then that's why the market is what is going to the upside. Okay. So if you want to trade it that way, obviously, this is part of price action. You can trade it that way, right? It's part of price action that, you know, after breaking a key level, if the market is trending to the upside, it'll come and test that key level and continue to go to the upside. But in light with what we've spoken about tonight, is that when the market comes for the third time at a high or low, you want to avoid selling the market at a high, right? At the high, you want to avoid selling the market because you don't know what the market will do. Whether the market pierce, will the market still sell? You don't know. Therefore, you do not want to trade the third touch, okay? At a high or low, all right? Any questions, guys, before we end the class? I've recorded the session. I'll send it to you guys when we're done so that you guys can have a look. We'll discuss boom and cash, guys. Fear not. We'll discuss everything. Everything has its time, guys. For now, focus on what you've been taught, and the time will come where we'll discuss boom and cash. A time will come when we'll discuss boom and cash. Okay? The time will come where we discuss boom and cash. So fear not. So it might be tonight. I might have people that have gotten the boom and crash strategy. So if they do confirm for the 10 o'clock appointment, because I have another appointment now at 9, it's already 21:02. Then I will give you guys an invite. I will send you guys an invite so that you guys can be able to get into the course. Yeah, start with 0.2. Thank you so much, my good friend. Use 0.2 lot size. That's the safest lot size that you can use. Okay. So thank you guys so much for tonight. I'm going to end the session and I'm going to send it to everybody in the groups. Okay. Therefore, you can look at this, give me feedback, and then we shall take it from there. So thank you so much, guys, for tonight. See you guys. If you guys will not sleep, then when we discuss boom and crash with other clients at 10, you guys can be able to join. Okay.